We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back to the Capital Mindset Show, everyone. Let me see if I can set this up properly. I'm just doing some last-minute setup before we actually begin. And we have one guest speaker. Jay could not make it tonight, so we do have Cole on the other line. And let's see.
Boy.
Speak, Cole?
What's up?
How you doing? All right, let's see. I think they removed this now. Oh no! So I'm gonna have to do something else with this. All right. So let's see if this functions properly. So it should work. All right. Cool. It does work. Okay. So yeah, we're going to begin with a. Oh my God! He fixed. No, I didn't fix anything. I'm gonna remove them all because I think they're more of a distraction than anything. But yeah, because I've gotten that complaint before, and I know it's because well, they don't even serve a purpose, really. Yes, it is. It is. No, it's all in its place. I'll remove them. But anyways, we're gonna be first going over, and we have the itinerary. It should be in the description below. Let me also kind of remind myself what the itinerary is, because at the same time, I need to. Keep track and make sure I don't get carried away or off topic too much. So the first thing that we're going to be talking about is the portfolio update. So for those of you who have participated in some of the calls, you guys are already up to date. For those of you who are just on YouTube, you guys aren't up to date unless you guys check it periodically. But this is a perfect time for you guys to ask questions. If there are any questions, whatever you guys want to know about it. But let's see. Let's begin by, and I won't be seeing your questions just now, so I'll just go over everything, and then we'll get to questions, okay? So, and if anyone's kind of curious, you want to also, let me see if this works out. All right, so it does work out. Cool. All right, so this tab or column will be filled out by this video, so that explains. So now you know what I've sold straight off the bat: Overstock, BHP, Cardinal Health. Cardinal Health might be a surprise to some of you, but Cardinal Health, we took profits. It was a decently sized portion of the portfolio. If you guys want to reference, go back to the older videos or the older portfolio updates, and you guys can get an idea. But yes, we took profits on that. I did look like an idiot the day after I did it. As you guys remember from the Discord, we were joking about that or talking about it. And yeah, so that's what these videos are for. So I'm basically going to go through each of these moves or each of these sales, and it's documenting it, and I'll post the link here in the future. But if you're curious about any other ones, by the way, if any of you guys are following the channel for a long time, I literally cannot remember which live stream it was because I'm terrible with titles. So one of the live streams, I did go over Brookfield Asset Management, Honeywell, and Tencent. It's the one where I talk about Tencent and buying or replacing it with Prosus, but I forget which live stream that was. So that's missing there, and I haven't had the time to go back and investigate. But this video or this live stream here is serving as an explanation for why these are, and this will be the link here. And I like to put it in the beginning so that someone can get the answer pretty quickly if they want to. If they're just curious as to like, okay, well, why is this different? Why is that different? And you look at all the portfolio updates up until now, and the goal is that you can kind of get an idea of how things or how I'm thinking and changing my thoughts over time. As always, it's not really I don't do trade alerts or anything like that, so it's not like a feasible strategy. That's not even the point of all this. The point of this is just to like kind of share my thoughts. You guys are my way of also thinking out loud, and I could be making absolutely stupid mistakes, so just keep that in mind. So do not. This is a friendly reminder. Do not do any of this. So anyways, so kind of going over the portfolio, you guys saw what I sold. Took profits on Cardinal Health. BHP was a watcher position, and I wanted to remove some of the noise. I'm keeping Rio Tinto as a watcher position, but BHP was an earlier winner of ours earlier this year for you guys who've been following the channel for a long time, and I kept the watcher position. I thought it was more of a distraction. Don't really want to be involved with BHP right now. Don't want to be involved with materials. We exited materials. I don't have any energy or material stocks. Rio Tinto was the one that didn't win in the end at all. We never really made money on Rio Tinto at all, as you can again, go back and reference the past trades. It was pretty bad. And by the way, past trades, I should not call it that. It's by the title past investments. So because trade is the wrong way of probably saying that, because I'm not trying to trade, even though sometimes it looks like I'm accidentally trading or swing trading. I'm not. That's not the intention. Some new positions you guys might have noticed is I'm starting to build out a position in Qualcomm and advanced micro devices. Yes, advanced micro devices. It has made it into the portfolio finally. It's been a long time coming for it to come back, but yeah, it's back in the portfolio. And the ones that are kind of on the, well, I think I referenced to some of you in the Discord call that, Cardinal Health was on the chopping block. But yeah, so it wasn't a surprise. What I'm thinking about Cardinal Health is there really isn't any further catalyst that I perceive for me to really benefit from the investment. So I wanted to just remove some profits off the table and look elsewhere what I could invest in. The same thing, I've been adding some shares to some of the chemical companies, pretty standard. I mostly been buying Celine's Corporation, not so much of Dow, and I bought some small amounts of BASF. So that's about it. Wells Fargo is a newer one. So Wells Fargo is the bank that I think is the best capitalized. And it's not just my opinion. Goldman Sachs came out with a report the day after, actually, we had the call. And that call in the first, I guess, there was, I think, about an hour dedicated just to Wells Fargo and talking about how Wells Fargo is well capitalized. The very next day, almost like amazing timing, Goldman Sachs comes out with their opinion, and it's basically all the same stuff. So that was nice to see that reassurance, basically, that they have the same opinion. And there's a little bit of, we can get into that, but there's reasons why I prefer having the best capitalized, well, I think it's kind of obvious, having the best capitalized bank in the times that we're entering than others. One other one that I've been adding to, one that's kind of on the chopping block a little bit is just to declutter is perhaps, and also kind of taking some, I guess, not tax loss harvesting, but harvesting some losses, might be Warner Brothers, even though it's like really tiny, but just not removing the position entirely, but just reducing exposure. Or I'm going to look at it again and decide to increase exposure. I need to really investigate that further. Anything else? Unum's on the chopping block too. Just also want to mention that too. Unum, but we have a small amount of shares that are still under contract for expiring December. And it goes to show you how those things can go wrong, because technically I have an opportunity loss on those shares that are under contract. So I kept the premium, of course, but I don't get to realize the full gain if I were to be called on them now, let's say, because I think the strike is like I think it was 35 or 37, I forget. And I know that's meaningful. I just don't feel like pulling up the contract right now. But you guys can refer to the older video where I show you guys the contract. I think there's a video titled something about, it's supposed to be a joke on clickbaity titles about passive income. So just know it's a joke. And yeah, so those are the new ones: advanced micro devices, Qualcomm. I'm trying to think of any other ones I might have added to. Oh yeah, I've been buying some Meta. So you've actually noticed, if you might have noticed, that the prices come down. So Meta, I'm actually finally getting interested.
You might have noticed.
You might have noticed. Yeah. Well, I think because it was at like 155 before. Now it's
it was bouncing between 150 and 170 for a bit.
Oh, no, I'm talking about the average cost there.
Yeah, okay.
Yeah, no, the price right now is 127.5. But there's actually someone that posted a, because now it's like more, let's say, known information as to why or where Meta is going with the metaverse. It's not like Ready Player One. I've already told you guys that in the Meta videos back when it was called Facebook, that the metaverse is going to be something more akin to, the more exciting parts are the B2B solutions that are going to come out of it, which I think have a lot of potential. But I want to mitigate or not go crazy with my exposure to stuff that's heavily involved with ad tech. So ad tech, like Alphabet is heavily in ad tech. I have a speculative position in another company that I've also been adding to in ad tech, and that one's grown too. I don't know if I'm going to make a video on that company just simply because of its size, but I mention it only in my portfolio update videos. I'm trying to think. I think that's pretty much covers everything. I think Molson Coors is a little bit on the chopping block. It's kind of like because it's done well relative to the market over the time period that we've invested in it. Relative to the market, it has outperformed just because the market's down. But, willing just to take that out and look elsewhere, to deploy that capital. And yeah, I'm looking at BASF, but BASF's a small holding. As you can see, the exposure is very small, just because that's going to be heavily destroyed. Like we talked about the chemical companies, how going forward they're going to be probably smacked down a lot if you think the economy is going to go in some sort of slowdown. So we're slowly building these out, and so I'm in no rush to make them big positions.
Viewer wanted to know if we should be able to see you right now.
No. You guys don't have to see me right now. Right now, it's just looking at this and hearing my voice. Just because the way I have it set up is that, I can just do this and just like, hello, I'm back, and bring this back. So, yeah, good question. Thank you for asking. I'll come. We'll come back. Don't worry. You'll be able to see our beautiful faces soon. Well, mine. Cole.
Yeah, not me.
Cole's refusing. All right, so then going over this, nothing much has changed, just the addition. I need to remove the ones that are sold because these have already been updated. You guys already know what happened. So Barbecue Holdings, this is registering incorrectly. That was Barbecue Holdings, but they got bought off of me by another company. We made a lot of money on those shares, but that got acquired by a Canadian company. So that's gone from the portfolio. It just got bought out. OSTK was sold, and some of you have been asking me some questions. I got questions on comment sections. So to answer that question really specifically is that I try my best to, as kind of a mental rule, to mitigate my exposure into the speculative side of the portfolio. You can see I kind of already told you guys this. So you can see a personal rule number 3, total max of 10% in initial capital. That's just like a personal rule I tell myself. It's not a hard rule. Like it can grow beyond that if it grows beyond that. But in terms of capital deployed, I try to keep it mitigated, just trying to maintain responsibility in that. So yeah, barbecue's gone. Egan, we already updated that one a while ago. And then you might notice that MPW has returned to the portfolio, but on the speculative side. So this was again added this week. And what basically going with this is kind of just betting on that things aren't that bad. So it's not going to be a core, or it's not going to be a non-speculative investment. It's going into the speculative bucket. And the yield it's pretty high historically. Historically speaking, it has always been a good time to invest at these yields. I've talked about that too. And it's kind of saying, okay, maybe the bearish reports are a little bit overly bearish because they're trying to cause some doubt in the stock, some FUD, in the actual use of the word FUD, not in the overused terminology or the overused version of it in these days that, everything is FUD if it's negative, but nothing has merit. I don't believe that. So I'm still cautious that management, what they kind of, I felt that they weren't being super open about certain things, but, then again, it could just be that I'm just being a little bit too picky there. So, but it's there. And I bought more Perry as well. Been building that one out a little bit here and there. What else? Oh, and NCR. So you might have noticed that NCR is also back in the portfolio, but on the speculative side. Because they're going through a restructuring right now. They were going to sell themselves, and they came out and said, we're not going to sell ourselves, but we're going to split into 2 companies. The company crashed on that news. And so I might actually buy a little bit more of that one. I'm kind of on the fence, but because I'm just actually getting to that other part. Some of these other ones I'm not selling right now. They're not necessarily on the chopping block. So like ASPS, Coupang, they're not on the chopping block just yet. But if any were on here that were on the chopping block would be those. Believe it or not, the ones that are delegated as fun, they're not on the chopping block. They're literally just fun holdings. Now, Rick was one that I actually ended up liking as a company, but it is what it is for that.
The TV show.
Yeah. Yeah, Rick. Rick will never be sold. Oh, no. Barbecue, Better Bed. That's not Better Bed. Better Bed, that was Barbecue Holdings, BBQ. Good question, Elemental Tamago. I'm just now looking at questions now. So, no. All right, so feel free to ask any questions now. I'm going to be looking at questions. Cole, if you see any good ones, let me know, and I'll...
yes, I am reading chat right now and not playing a video game.
Oh, okay. No, you can play video games. This is whatever. I probably should do an update because just for myself as well, I got to find the time and then I can do an update on that. And then look at that. Oh, and I see Fuhat's talking about BAM. BAM's going to make it probably into the portfolio at some point again, because if you guys recall, again, we exited BAM, and now it looks really cool based on when we sold. Just because, remember, if you guys go back, again, I got to find the video, but I talk about it earlier because BAM's thesis and why I wanted to sell. And I remember, I think it was one of you guys that's one of the Canadians in the chat. I think it might have, I don't want to call you out, but it could be JP, I think. I just basically called you out, but I think it was you who was always asking me, like, why do you have BAM designated as sell? And every time I would answer, it's because they do compete. They're an alternative asset manager, and so they compete with the traditional forms of investing, such as, when we think about bonds, right? So if these funds, they're like, oh, we can't invest in bonds anymore because the yields are terrible, we'll go to BAM. And so now, with rates rising, something like BAM would not do very well. And the management team has told you this for a very long time. They always say that we're competing against traditional forms of investment. Kingdom of Finance, that's why it's a sell, because it's trash. Yeah. Okay, Kingdom of Finance hates it. All right, so
Bam was my nickname in high school.
Bam was the nickname in high school. Okay, I'll bring myself back, and then we'll continue from there, so you guys can at least see like visual cues on my face. Okay, so I'm going through the questions now, and I apologize if I accidentally skip over you. Is anyone here going to use those? Yeah. Position quite yet. If not sure, he'll answer when Q&A is on. Have I talked about the Google position? What about the Google position? Oh, nothing happened to the Google position. So, the Google position is looking smaller, not because I sold any shares. It's because other things have grown.
Yeah, Google's a small cap now.
Oh, yeah, that's a joke from another YouTuber. But yeah, no, more cap. Because you guys have to remember, do you guys remember that when you guys asked me, like, oh, how much like cash were you in? And I was a decent amount of cash for real estate. But yeah, no, as we deployed more capital, I haven't sold a single share of Google, and nor do I plan on so far. But if I do, you guys will know. We'll talk about it. But no, it's the total amount of shares hasn't changed. It's just other things have grown. So because that's how it's calculated as a proportion of everything else. So good question, because I think I've had that question before. Oh, never mind. Oh, okay. So you already found out. Okay. Yeah, you just checked, I guess. So I saw your question and then you found out about it. All right. Mental bet event, capital mindset, wondering why Micron's not my cup of tea right now. I'd probably want to buy or start in a position, if I was to start a position, closer to book value. Cash flow seems strong. Yeah, for natural gas, cash flow seems strong now, for now. But I'm not touching materials right now. Again, it's part of my broader thought process. I could be wrong. We adding TA. Oh, TA is not technical analysis. That's a truck stock company that Dan is asking about. I might add it to the fund portfolio. Yes, a fund by the way doesn't count as speculative. I know, but you can see like okay, whatever, guys. It's like you see the allocations to fund. It's like nothing. So it is what it is. You got me saying that, Kingdom of Finance. It's a thing that's in my head now. I can't stop saying that phrase. What you mean by Qualcomm and AMD here? Oh, okay. Asking about someone else. Echoes. I like it now because now I believe that we're kind of entering that point where everyone's going to be selling it off. We're going to see more pessimism in, like, I'm still building it, but we're going to see more pessimism. People are going to kind of throw all these semis away, even though some of them have a lot of good future prospects. A company like NVIDIA, people on the Discord have been not so positive on it. In fact, suggesting a short on it, and I think that would have done well if those people went through it. I don't know if they did or did not, but it was a good call. But just kind of understanding how each company is positioning itself. Yeah, I think AMD is one of the best, if not the best, of, like, let's say that I'm going to say the big three. Intel, AMD, and NVIDIA. I think AMD is actually the best positioned. And on top of that, I got to say that their acquisition so far, I think is going to be like one of their saving graces. And then with Qualcomm, what's interesting about them is the various teams that they have inside of them and what's going to happen with ARM. I think I'd talk about that in another video, but not to get too jarred on that. Oh no, Europe freeze. I'm so sad. Oh yeah, we're going to talk about Tattooed Chef. And we're going to talk about the other stuff. It's all in order. So right now we're finishing portfolio update. Want to get through you guys' questions about this. Then we move on to the next topic and then the next topic. So you see I'm doing more organization for you guys. It also helps for both myself when I'm looking back at this video and helps viewers when they're watching it after that they see it in a certain order and progression. Just thinking about the, the ease of viewership. I'm with you on Qualcomm long term, but I'm a wait and see for it. Yeah, so let's do it, Dan. We're on this journey together, and we'll be talking about it, of course, on in the group. And yeah, so Qualcomm and AMD. I mean, we can even talk about it on the calls here and there because I know other people are also interested. Opportunity Micron dividend is trash. You guys are so funny back and forth. I need to make sure that the widget is still working. Okay, so it's good. When are we buying AMC? I'll buy AMC when basically my purchases become so significant I can vote people out. How about that? That's so basically when it's really low. Yeah, and by the way, so actually to add to this, I was thinking about doing a video talking about potentially building out Google even more. Just because I'm content with, me and my wife, we're content with our savings. So basically all the cash that's coming in through, for example, work and other forms, might be deploying it pretty much entirely. Not pretty much like as if no, it's more like a certainty we're going to be deploying all of it into the markets. Not that we're going to be putting it all to work all at once, but at least it will be in the brokerage ready to deploy at any given moment. So that's kind of where I'm at. So yeah, if anything, I might be interested in buying Google. Just a guess that I probably do. I was going to do a video on WBA. I don't know if you saw my comments on it, but I was taking a look at it, and I think I narrowed down why the company is so severely underperforming, on top of the previous thought that CVS has now fundamentally changed as a company. What I mean by that is CVS, basically, if you look at a lot of the insurance companies, health insurance in particular, they've done absolutely phenomenal over this whole year. And CVS is now not just a drug retail store. They're also an insurance company. And insurance companies, remember, rising rates is actually really good for insurance companies because they get to roll over that float into higher yielding assets or higher yielding instruments. One thing with CVS is now that they have that exposure while Walgreens does not, that was actually a benefit. While prior to that, when I was looking at the two, because if you guys don't know, I used to own Walgreens and we did really well on Walgreens. And over the duration in which I held Walgreens, it outperformed CVS. But now the reversal is not true. So from, let's say, the beginning of this year till now, and I apologize for just hitting the mic, it's been the opposite. So CVS has outperformed Walgreens by a decent margin at this point. And I believe, I really strongly believe it's because they have this exposure to insurance, because that part of their business should be doing well and the market's rewarding that. So I've addressed that in the past, but more looking into it a little bit deeper, I was looking at Walgreens operations, and it does seem like margins over time, I was going to address this in a video dedicated to Walgreens, but margins over time have been becoming compressed further and further and further, and this has been problematic. But I was going to see as to why. I wanted to investigate why that might be. Maybe I have a hunch that it's more like the obvious competition. Competition is fierce. So while sales were growing, if you actually go on any of the free websites and you can kind of map out operating margins over time, you would see it declining. Gross margins too, see it declining. So it's a bit of a problem that they're having to fix. But we'll see. So they're very cheap. I think they're yielding close to 20, if not they're past 20. I don't know what the price is right now. I forget what the price is, but I'm pretty sure they're probably at 20 in terms of earnings yield or free cash flow yield, or they're above 20. Or they're just under 20. And the dividend, I think, is like 6%, something crazy like that. So, yeah. Let's see here. So Dan, I might talk about this a little bit more on Sunday, but there's some key points I want to focus on because actually someone shared a recent story that wasn't really, let's say, public, but basically confirming a previous statement that I've told you guys. So it's now kind of everyone knows about it, I guess. But certain firms remaining unnamed are delving into this, and it's more certain now than before that there's going to be a whole host or suite of business solutions, B2B solutions. Like I said, it's not going to be Ready Player One, but that's how people think of the metaverse. And I think that's like the joke. Oh, it's Ready Player One, blah blah blah. But I think the real money maker is going to be in a lot of those B2B solutions, allowing professionals to work with one another, communicate in different ways, and share information in a more interactive way than before. So I think that's kind of like the future I see there, but we'll see. I think so. Who's they got like 4 competitors? Who we talking about with 4 competitors? Warner Bros. No, not Warner Bros. Discovery. Walgreens Boots Alliance is a good stock. I mean, yeah, no, it could be a good stock. So undoubtedly, I'll tell you right now, it's cheap. It's so cheap, guys. So, but I got to investigate and see, like, how are their problems? How are they addressing their problems? Are they going to surpass them in the future? I don't know. But it's undoubtedly cheap. Like, it's pretty insane. Oil and gas sector companies or pipelines. So oil and gas, I've already sold out of those. I've made my money. And you can go back and reference all the older portfolio updates. You can kind of see it over time. You should be able to see it in, again, like the past investments. It will direct you to the videos. Or you can actually type in Capital Mindset. Like the one I owned was ConocoPhillips through when I was publishing videos. I owned Occidental Petroleum, but I sold way too early like an idiot. But yeah, ConocoPhillips, when you see that progression, I finally just exit out of it. So I don't own any. That one was great. It returned a lot over the duration, but I don't own it for reasons, because I do think that there's a point where we do see demand destruction in one form or another. So
you're out because of ESG reasons.
Yeah, I'm Cole's right. I don't know if you guys could hear him, but I'm out because of ESG reasons. Totally, that's exactly why I'm out.
I want to say I'm proud of you.
You won't say you're proud of me?
No, I will say I want to say I'm proud of you.
Oh, Cole's proud of me because
it takes a big man to, stand up for what they believe in.
I plowed all that money into private prisons, though.
That's such a great punchline to that joke.
Yeah, no. Well, I know that Fuhat, that's his favorite sector. Fuhat, I keep trying to tell him, is like, hey man, no, don't invest so much in private prisons. And he's like, you can't stop me. There's nothing you can do. All right, so someone's talking about ASML Kingdom. We got to talk about ASML. But capital amounts, even both are attractive prices. Which businesses would you rather own? I'm sorry if I skipped. Oh yeah, no, and I almost didn't answer the second part of your question. Apologize. But pipelines. So I do like. What's the name of that pipeline? Just because most of the pipelines are switching over to C Corp. There's one big one that's still at an MLP. MLP, by the way, is I personally wouldn't own an MLP in a tax advantage account just because it's a nightmare. Look into it. Please look into it before you get involved with an MLP, and discuss with your tax professional that knows your own tax circumstance, like some of the details regarding that. But it'd be an interesting conversation, at least a good learning moment for you to kind of get an understanding of limited partnerships and how they interact with you, what you're going to have to be doing, filing a K-1, etc. So it's not Energy Transfer. It's not that one. I literally forget the name. I think it's, I literally forget the name. I'm not going to shout out a name for it to be wrong because I don't want to mislead. But, yeah. Let's see here. I'm trying to scroll through and make sure I'm trying my best not to skip over any questions, guys. I buy Meta for the opportunity to just go to Rick's in the metaverse. Yeah, man, that's the thing. In my opinion, Walgreens Boots Alliance is a fair business, but nothing to rave about. Yeah, like it's not the sexiest business. It's like, okay, is a pharmacy going to do good? Is the convenience store going to do good? Is it? I don't know. Is it going to do better than other things? I don't know. When I say other things, I mean competitors. And how does Amazon fit into this? I don't know. right? It's all these challenges that they have to overcome. The numbers are telling me that there's some challenge. There's some challenge somewhere that they're not overcoming, and that's reflecting in the operating margins. And the market is probably pricing in lower margins into the future. That's why it's so cheap. I think we haven't seen prices, and if those of you who've been in the market for a while, just to put it into perspective, we haven't seen prices like this for Walgreens Boots Alliance and 3M since about 2012, 2013. So just pause for a moment and think about that. So many of you probably haven't been invested that long. You weren't even investing back then. You are seeing 3M at prices you haven't seen there for good reason. Again, refer to the 3M video. And you're seeing Walgreens Boots Alliance also trading at prices not seen since 2012, 2013. So, yeah, that's the that's it. Private prisons is based. Yes, check out the video on private prisons for some context on the real estate value. It's there's actually an interesting play there, but it's heavily disliked. KLAC or LRCX? Well, very different businesses. Probably LRCX, just because it's more broad, exposed to like the picks and shovels play, so to speak. But KLAC is a good company too. I mean, you're pretty much putting we're playing that game again. You know, which one pick? Private prisons are based, XML, capital mindset, paid version. We're gonna get into the other topics in a second because I'm kind of just finishing off these questions because I know Cole's a little excited to talk about one of them.
Private prisons.
Yeah, he's excited to talk about private prisons. I think it's EPD. I think that's the one, actually.
It's the one where Joe Biden's going to be in 2 years. I'll tell you that.
Oh my gosh, political jokes, guys. That's what you guys come here for. You don't come here for anything else, just the political jokes. You guys? Oh, sorry. I didn't mean. I'm gonna come back to everyone's questions, but do you guys see how this happened? So. There's videos. I have them on the channel. Go check them out with Verizon, but apply AT&T to the same standard as Verizon. I did not like Verizon when I covered it, so I did it as a subscriber request. I think I covered it with Disney, and what I didn't like about Verizon was it's not like it's a chronic problem, but basically part of the business, part of the enterprise requires it to be so heavily leveraged, and so when you're getting exposure to a business that is chronically overly leveraged, or not overly, that's a wrong word, naturally leveraged. You don't want to be owning that in a liquidity crunch. And that was kind of the thought process behind that. But yeah, it's not, I didn't like it back then. So I'm not really surprised where it is today. Personal opinion.
You said in the past that liquidity crunches are similar to Nestle Crunch, the candy.
Yeah, liquidity crunch is the same thing as a Nestle Crunch by Nestle. Our sponsor in today's video, Nestle, the best company on earth. No, I totally would own so much of Nestle at the right price. But anyways, not really.
I'm looking at buying Nestle, but I'm waiting for them to get into the private prison business.
Yeah, I'm personally waiting on Nestle to get into private prisons and teardrop sales.
They're already in child slavery, so they might as well.
Whoa! I don't know anything about that. Our sponsor doesn't like that message. That's not a sponsored message.
There's currently been 0 accusations of that ever happening, so I don't want anyone spreading rumors.
I haven't looked at Helen of Troy in a long time. Are they? I'm guessing I'm being asked because they are down a lot. So I shall. My gosh, they just got obliterated. So I'll show you guys this right now. So Helen of Troy is down to like $98, and I think I said I was looking at them. I forgot when I said I was looking at them, but basically, yeah, you can kind of see. Liquidity crunch galore. This got absolutely annihilated. So I'd actually investigate like why they got so destroyed. But yeah, we haven't seen prices like this since about 2018. I don't know. Yeah, I'd probably look at them now more than before. It'd be just interesting at least to investigate why. Maybe it's something interesting to buy. I don't know. How do you see that so fast?
I don't know. I never see it on anyone besides you. You're the only channel where I get it first.
Let me see it because I can't even see it. Okay, I see it here. So we'll come back to the other questions, but we did get super chat. So yes, bump. Wait, you guys can see me. Bump. That's not even my thing. We're stealing Strongman's thing. I don't have a thing yet. What should be my thing?
I love the salty sweet crunch of a Nestle Crunch.
Just saying that, or just like
Just
literally taking it out?
anytime you get a super chat, that's what you say.
No, no, no. What we need to do is like be more degenerate. So it has to involve a substance of some sort, and every time the super chat comes, I take that substance.
Oh, you can't. Come on, Fabio. This is YouTube. You can't
It's
be
YouTube. You can't do that. The substance will be bacon. Yes. No, no.
That would catch on. That would catch on. Please do that.
What? By eat bacon?
Eat bacon every time you get a super chat. That would totally catch on.
Jeez, man. I actually probably would die of cholesterol. I don't know.
I know. Kingdom of Finance is spreading truths in your comment section.
What? What's going on?
I know he's just spreading a lot of truth.
Definitely bacon. He just says definitely bacon. Fabio bullish on Smith. Oh, okay. I don't want to skip other people's questions, but I'll come back. I see your questions. All right. So let's go through it. Boom, boom, boom. All right. So Leggett and Platt. Leggett and Platt. I could be wrong on Leggett and Platt, but Leggett and Platt. Yeah, you could be right. Unless I'm counting for the dividends for the last 5 years. A buy price of 25 and it's traded sideways unless I'm not counting the dividends. Yeah, no, it hasn't been a good investment in the last 5 years. You're right. I could be wrong on Leggett and Platt. I have the ability to very much be wrong on stuff, guys. Oh, I just coughed and like skirted the comment all the way up. So no, Leggett and Platt could be a loser for me. Absolutely.
You did what? You skirted it up?
No, like I dragged it up by accident because I coughed while I was moving the comment. But I'll look at Leggett and Platt again, do an update on it, revisit my position because if I were to get out of it now, it's not that much of a loss, really isn't. In dollar amounts and in percentage terms, it's not really that big of a deal. But yeah.
Yeah, you famously said that you don't care about money.
No, yeah, I don't care at all about money. That's why I'm investing in the market.
It actually makes you very similar to our sponsor, Nestle.
Makes me very similar to our sponsor, Nestle.
They've donated over $20 million to college charities.
Oh, so noble.
Help pay tuition for students.
You guys, how dare you guys doubt our sponsor? I'm disgusted. I'm honestly disgusted by you guys.
Some days it makes me want to throw up, which the only reason I wouldn't throw up is because I wouldn't want to waste a single calorie of that Nestle Crunch I just had.
The Nestle Crunch. Oh my god! All right,
it's just one of those foods you can't throw up,
Yeah. Guys, if you guys aren't checking out our sponsor Nestle, what are you guys doing?
Nestle cares about the youth.
Who said
jobs
that?
Program.
Yeah, they do. They care about the future customers. Updates on MPW. So I did do a video update on MPW. I just addressed MPW as a speculative holding. So yeah, that's the update. So I'm in it. Leverage and race to the bottom in high rate environment. Divvies get. Yeah, you're talking about the telecoms. I would agree with that. Let's see here. I only want to own Nestle, private prisons, military contractors, meatpacking plants, and Facebook. Yeah. Okay. You forgot a couple. You forgot a couple in there, but you got most of them. You forgot the some chemical companies. What else? What else would you have forgotten? Private prisons. You got that. Cigarette companies. Come on, Elemento. This is amateur hours right here. This is amateur hours. If you want me to build the well, no, they score high on ESG. That's the thing. We can build well, let's say what some people might consider to be, and I don't think of it that way, but I understand, and I have no problems with other people thinking that way. Invest in what you like, but yeah, it's we could definitely build an index for that. Let's see here. Chaucer index coming. Oh, someone's already mentioning it. Definitely bacon, capybaras. Going through all your comments. I got to catch up. Jeez, man. Dead Money's asking what percent of cash you right now. So not that much more. In fact, it's because cash was coming in earlier and I was kind of segueing or separating. But I'm kind of closer to that 50-ish percentage. I don't know. I don't have an exact percentage for you, but it's around there. And I'm not adding any more to like the savings or cash pile because again, that's like for if you consider it like a lot of it's for real estate. So, I mean, like I could change my mind and be like, oh, I'm not going to buy real estate. I'll just deploy this into the market. But that's like mentally how we have it designated. And right now, everything that's coming in is basically going into the brokerages because we're content with at least what we have saved up. And if anything happens at like an emergency, like we're it's good to go. It's fine. Super pull out your horn. I don't have a horn. I mean, that's a bit of a problem. Oh, like a vuvuzela, we can get that. Fabio's flirting with making Haram content. Yeah, the Islamic audience would not like that too much, and the Jewish audience, but it's not kosher. But Bob Smith, SPY hit 300, and then on all sides. You can buy and hold one stock. Because if it's not an index, because that would be easy. If I could only hold one thing, I'd pick the thing that can change over time for me to accommodate for changes in the market. So that would be, that would have been easy. I would have picked an index fund, because you can't change out of it. All right, but if I had to hold one right now, wow. Okay, I kind of want to play around with this and not be too vanilla with it. So on purpose, under the understanding, I'm trying to not pick a obvious ones because like my mind would go, and you guys would understand, I'm kind of biased, like straight to Alphabet. Like that's the one I'd probably go to. I won't pick that one. I'll pick like a more testy one, and I'm assuming it's today's prices, which makes it, Markel. Because I'm still cheating there. I'm still cheating. Markel or Berkshire, it's between them.
Did you hear me say those two?
What? Which one? No, I didn't hear it.
Oh no, right when the question was asked, it said Berkshire Markel.
Oh, no, I didn't. I didn't hear you.
I might have been too far away from my mic.
Yeah, no, I don't think the audience might not have heard you either. So, okay, we both agree on that. Wow. Berkshire Markel. Reasoning is because they're going to be investing on our behalf and adapting to the market. Hopefully, right? Hopefully. So that's the idea. So, probably like, I know you said one, so then I'd probably pick Markel over Berkshire simply because of size and scale. Berkshire is like going to be for capital preservation. So if that's more my goal, probably go with that. And they'll be able to navigate. I'll underperform probably because it's so difficult. Well, by the way, actually, no. If you pull up Berkshire Hathaway now, I believe they have now outperformed the market over a 5-year period. We just checked this on Sunday. So let's actually pull that up and see for ourselves. But yeah, wait, do I already have a tab open with this? I do. All right, so
compare it to Rick.
They want me to show Rick? Oh no, not BRK. Oh, there it is. No.
Compare SPY, Berkshire, and Rick.
So here's Berkshire, A class, 5 years, and then we're gonna go to VU, not SPY. Don't like your SPY. All right, let's see real quick. Yeah, you see it's right now outperformed, but there's one they missed. For they were all deceived. For in the shadows, under the fires of Twin Peaks, there was another RCI Hospitality Holdings that is up 161.03%. All right, so yeah, basically if you buy maybe my answer should just be RCI Holdings. I don't know. Maybe that should be my answer. Maybe I should just go all in into that. My gosh, they entered again. These little punks. All right, anyways.
What would the Are there option chains on Berkshire A?
I've never checked.
I don't think there are.
Honestly, I've never checked. I never bothered. Let me just say that. You know what? It's kind of sad. I didn't have the curiosity to check, but I've never checked.
Yeah, at least on Robinhood, I can't get options for it.
I know that Jay, when he was last on, he did say that he was interested in BTI at these prices. But yeah, I haven't really. Let's actually. Let me see where BTI is at.
Whoa! I'm getting shade thrown at me in chat.
Shade. Why is shade being thrown at Cole? What did he do?
Financially fit. You need to join the Rue Rabble podcast with Fabio and probably not Cole.
Huh?
Yeah, what'd I do?
Cole's videos. Check out his videos. They're really good. Okay. I am thoroughly entertained in his videos. Sounds like I'm shilling you. Our sponsor today is Investing with Cole.
Fabio, you want to talk easy money? You can sell right now on Berkshire B. You can sell a put 2 years out, $25,000 down, make $2,100. It's 10% in 3 years. 10% in 2 years.
10% in 2 years.
Yeah.
There we go.
I don't know. Whatever, you know.
Yeah, 10%. Crane Man, I got some questions for you. But I'll probably like message you on your YouTube channel or something. Mosaic, you're asking for Mosaic, but I got some questions for you about machinery in your area. So, but I'll get those to you. It's no pressure to answer them, by the way. You don't have to. You owe me nothing. I had MKL in my mind. Okay, so other people were thinking the same thing. I'm trying to make sure I don't skip over anyone. Oh, okay, this is a good question. So you have British American Tobacco, Ultra, Philip Morris. Don't make cut on private. Oh, no, that's more like okay. I thought you were asking between those. But anyways, between those, I don't know. Philip Morris is the safest, but I don't know. Because it's just BTI's got a decent amount of leverage. I had to get a new AC unit for my house. Oh, you're talking about HVAC companies. And my choices were Carrier. People in this, they like Carrier. There's not, and some cheap budget brand also owned by Carrier. Yeah. Carrier is a solid company. Carrier is the one that got away from me. Gotta be honest. I talk about it, but like when UTX, when they split, there was a brief moment in time, and I talked about this. I think like similar to not Walgreens, Warner Bros. Discovery, but it didn't happen. It wasn't good, let's say. But this one was actually good. So United Technologies and Raytheon merged together. They created Raytheon Technologies, and they spun out Carrier and Otis. I looked at all of them, and I chose Raytheon, and Raytheon took a little bit to play out because I'll actually pull up the chart. And Otis was the other one I picked. Otis did not perform as well. It did perform pretty well, but did not perform as well. So let's first look at RTX for a second. So let's go over the 5-year. So literally it happened quite literally as COVID. So you can kind of say, okay, was it because of the merger or was it because of COVID? Well, whatever. It was low for a while. You had a lot of time to accumulate. And so, yeah, that was a good time that was there. And then the other one was OTS. OTIS, I believe. Yeah. So also kind of looking at it. So that was basically from the get-go, it was basically roaring. And I think Carrier roared even higher. So Carrier, but should have just bought all three, to be honest. You could have just bought United Technologies, actually, when it was pre-spinoff, but it is what it is, whatever. But yeah, Carrier I think did much better than Otis. Oh, sorry. Want to check this out. Yeah, from beginning to peak, 357, and at least from the duration I held, which around July, summer. And then 253. Let me see again what my loss potential was, because it was, I think, even more. I think it might have been worse, the difference. But you shouldn't be doing this or dwelling on the past, but it is what it is. Yeah, around here, 88. So you see, I got absolutely, like, the opportunity cost was massive. So, anyways.
Yeah, you shouldn't do this, but if you did.
No. You shouldn't dwell. You shouldn't dwell because there's no point. You're not really learning. Well, maybe a good point to learn is like why. And I got the answer for you because I investigated like why. Because I do that mental exercise at least. So with Carrier, when they spun off, they were just far cheaper. So they were just really cheap, and the multiple was a lot less. So I basically was willing. I paid for more for what I perceived to be a higher quality company than Carrier. I believe Carrier was lower quality. And the thing was that Carrier being so cheap, you had basically, just better built in right there. And then Otis, you were already paying a premium there. So because the market wasn't giving it to you for free, the market also understood there was a premium there, or should be a premium there. And yeah, accordingly, it was priced. So yeah, I don't have a horn. This kind of sucks. All right, so kind of going through this. I didn't see any hate towards you. I don't know what you guys are talking about. There's no hate towards you.
No, some guys saying like, "Oh, Fabio is so responsible," and Cole just watches hentai all day.
No, but that's funny.
I don't know where these rumors are.
That's not me. That's just funny. That's just banter. That's the thing.
These salacious rumors.
These salacious rumors. I don't know. I thought there was like actual like I don't know, aggressive, hateful comments. So yeah.
All I'll say is now I know what it feels like to be the CEO of Nestle.
Salacious rumors.
Yeah.
What is all this? Wait, what are you talking about, Cole? Our sponsor is beloved by the people. No one out there has anything negative to say about our sponsor, Nestle. I've never
except
seen
his horrific hentai addiction.
Yeah. That's another. That's something that people I've seen. It's a little bit mentioned.
Would that even be a news story if it came out?
I
like
think
the
it would.
CEO
I
of
don't know.
Nestle?
That's kind of weird. People were all about that guy from CNN who was doing the thing in front of the camera, and he didn't know the camera was on. You guys know, right? Guys, go look it up. Oh, by the way, who I actually need to get a sponsor for is, the steel case chair. This thing is so comfortable. I can do live streams pretty much like this live stream I can do forever now because literally it's like, okay, do I have the energy to talk? And then we're good to go because this steel case, I'm in talks to see like if they want me to do like a review, and I'll do a review of this chair because, well, I'm basically telling you right now, I love this chair. But yeah, and with the cushion, it's fantastic. It's fantastic. Okay, so it's a product that I use, and if you're a working professional in your domicile, I purchased 3, 1 for here, 2 for downstairs, and so if I'm working here, if I'm working downstairs, my wife's working downstairs, we're good to go. It's pretty comfortable. Okay, so what do you think of Seth Klarman? Only good things about Seth Klarman. Don't think of anything bad thing. It's very seldom that I have any bad thoughts about. Well, I don't have bad thoughts, but like where I have criticisms, because especially like Seth Klarman's, I can have like a disagreement individual. Like if you told me something he said and you didn't tell me who said it, and I could disagree with him, you would get like an unbiased opinion from there. But like I don't know of anything that he said or invested in that I necessarily disagree with. Maybe Intel, I think, but that's neither here or there. Okay, so we did have a question at Capital Mindset. What do you think is okay? I was thinking about doing a video just about this because I think it's really funny. I don't know if any of you guys are from the UK, but Cole, and we got to get to the other topics. We were just answering questions. We have other topics to get to. But
Cole, I'm from England.
No, not that you're from England. What do you think about the prevailing thought apparently among the populace in England that has something to do with the tax cuts? What's going on?
I don't know anything about the tax cuts.
Okay, basically they were passing some tax cuts, and then it was bad timing that while they were doing the tax cuts and they were passing the bill, everything started going to heck, right? And so a lot of people started associating the dramatic sell-off and everything, but basically the destruction of their bond market or panic in their bond market and gilts market specifically. To the tax cuts, and I found it was funny. That was all over Reddit. I don't know if you saw anything about that.
Well, Fabio, if you thought that was funny, don't get into stand-up.
Yeah, definitely. I mean, I go to stand-up shows here and there, and if you're ever down south, because we're the South, not you, we'll go to stand-up because I know you like stand-up. Actually, true. No, we should go to another town, and we should go to the stand-up clubs there. So we'll have fun there. Because I think they have even better stand-up places. But yeah, not just Reddit, Fabio. The news is saying that too. That's really cringe. But it is what it is. It's low hanging
Just
fruit
saying
information.
tax cuts are the problem.
Yeah, the tax cuts cause it because they're politicizing it. They're not like investigating further.
So what did cause it, Mr. Smarty Pants?
That's going to be for its own video, but we've already talked about it. We've already talked about it on the public call that I actually published on YouTube. I talked about it a little bit there, but it's more so having to do with the brief sentence, one word sentence, dollar shortage.
Whoa.
Yes, it's basically what we've been talking about for a while.
The liquidity crunch?
Whoa, yeah, like the word that this channel has been saying for a while, for a long time. Yeah.
Yeah, didn't Jeremy coin that?
Jeremy coined he started using the word liquidity crisis. I'm not sure if he saw my videos or anything like that, but he started using the word liquidity crisis at one point. Because I said like his stocks were like canaries in the coal mine for this kind of stuff. So, I'm so you guys are bringing tears to my eyes, but you know, I would question what you meant by the euro dollar though, because people think euro dollar means like euros and dollars. It doesn't mean that necessarily. But yes, tears to my eyes when I see that. Tears to my eyes. People are understanding, and we're spreading the good message. It is over for England. It's over for England. I'll just bring up the comment because I think I love Elemental's comments here and there. It's like, oh no, I'm so sad. The English are all going to starve. What a tragedy. Elemental. Ricky keeps mentioning the horn. I'm complete. It's going over my head. Horn is definitely means something, but I'll tell you, like where I live, it doesn't mean anything. So maybe where you live, horn means something else. Because clearly the word horn is very important to you.
Well, I can tell you, who doesn't have a horn is the CEO of Nestle. I know there's been a lot of rumors that he's some kind of devil. It's not true.
I feel like you're bringing it back to the CEO of Nestle. I don't know if we got permission from our sponsor. Nestle, by the way, is our sponsor. I don't know if we got permission necessarily to, talk about him.
To knock down these terrible rumors that have been.
Yeah. Well, I think we have a duty to knock down those terrible rumors. By the way, if you guys are enjoying this live stream, if you guys aren't, don't worry about it. But if you guys are enjoying the live stream, you can like it. All right. I don't ask for that usually, but let's see how high it gets. All right. But if you like it, if you don't like it, you can downvote it too. You can say, I hate this. It's garbage. And you can comment and make fun of me and stuff. Call me, I don't know, whatever you want. All right. Anyways. So, let's see here. So someone's asking, okay, quick breakdown. You haven't missed much. I've been answering questions. I did a portfolio update. So the beginning part of the video is portfolio update. So you just go back and watch, I guess, let me see how long we've been filming for. Let's see, about an hour. So I think like the first 30 minutes gives you like a portfolio breakdown. So it's like a 30-minute video if you just want portfolio stuff. And then we're going to get into the other topics, which I guess we will segue into right now. Because I know I would love to answer everyone's questions, but yes. Did you ever look at, no, I haven't looked at ADN yet. And PayPal is, I think, at $80 now. Let's see if it gets back to 70. Still like GPN personally, but just got here, just did that. Global doing shorts, basically there isn't enough. My man, I like it. Yep. Yeah, you're there. We swallow. I love the creativeness because I usually say nibble, bite, and gulp, and then all these words came out of it. But I love it because it's all part of the capital mindset lore, like these words, and then people are like, "What?" Because I know, right? That's why I did it, because it's funny, it's weird, it's quirky. So, what price will you swallow the management pill? Oh, that's probably not what you meant. You actually just meant swallow the management pill. I thought you meant like swallow MPW shares. All right, I misread that. I read too much into it. Because of clear fundamental opportunity. Well, I'm already am. It's in the. Go back. Look at the beginning part of the video. Portfolio update. MPW is back to the speculative side of the portfolio. And I don't know if there's a link provided for the portfolio. If not, I'll make sure it's in the description after this video. If not, also other people can probably send it to you. I think a huge number of people now have it. I think I can check in how many people have it, the link, and go on it because it saves to your drive and it updates when it's updated. Anyways, okay. So tattooed chef. That is the second topic. We're now down to number 2 topic. Cole, what are your thoughts? We'll bring up tattooed chef here.
Tattooed chef, yeah. I mean, clearly these people are not good accountants, you know?
They're not good accountants. Why?
Oh, because they couldn't count.
Well, because of this. So this is the announcement that if you haven't seen, Tattoo Chef to correct certain expenses in prior reporting periods to address technical accounting issues. So in English, basically what happened was they were recording certain expenses and putting them in operating expenses, but they should have gone as a deduction to sales. So as you can kind of see, I'll kind of read through this again. We're materially misstated and should no longer be relied upon and should be restated because the company incorrectly recorded expenses that related to multi-vendor mailer program with a large customer, maybe Walmart, I would assume, or Target, as an operating expense rather than a reduction in revenue. These expenses for advertising placement by a marketing service firm on a straight line basis were life of the contract rather than the service were actually rendered. Okay, so kind of read that again. Expenses related to a multi-year vendor mailer program with a large customer, we don't know who it is, as an operating expense rather than a reduction of revenue. Okay, so basically the numbers shouldn't really change as far as like the net line items are concerned, but it's basically an expense was incorrectly put into one place where it should be put more above into the sales. So it should have been a reduction in revenue. And expenses for advertising placement by a marketing services firm on a straight line basis, because I think they started expending a lot more in marketing, over the life of the contract rather than when the service were actually rendered. So recognition problem there on top of that. So long story short, oh, yeah. We're not going to throw shade at the firm or anything like that. We're not throwing shade. And it's not a joke, only 3 people. There's actually a pretty sizable number of you that I know are in public accounting of some form. So, Ricky, so this is what I was referring to. Yes. What is your price? Yeah, so yeah, this happened. And because of this, this happened to Carrier. I'm just kidding. That was supposed to be a joke, right? Because of Tattooed Chef's news, that happened. All right, Google is basically saying, no, this is the stock. No, Google's doing its thing right now, so give Google some patience. All right, there we go. Just had to refresh. But this whole okay, so you see this noodle pattern? We're going to see what happens tomorrow, but it's down about 2.67% after hours, but it was down more. I think at one point it was down 8%. Or 6%. So my apologies. I think it was 8% because Strongman Personal Finance, he posted a picture. But yeah. Oh my gosh. I love this. So this is a joke, an inside joke for the Capital Mindset lore, because in one of the live streams we went over Jeremy Financial Education's video, and in the video he looked at accounts receivable. And he was basically, in a general sense, yeah, it's money that's owed to you within 1 year. It's payable to you, right? It's receivable to you, payable to them.
When he's like, somebody paid Tattooed Chef their money.
Yeah. That's where the joke comes from. So I have to explain these because they're so niche now to Capital Mindset. There's a lot of niche jokes. That's why a lot of the memes, when I create them, if you're not in the know of what's going on in YouTube finance or Capital Mindset, you're not gonna get it, but it's fine. It's for my fun as well. I have fun making those memes. But yeah. So that's where that meme comes from. What is my gargle price? See, that's what I'm talking about with you guys are getting it. Well, you guys, yeah. But yes, there was a public accounting firm. They're point. This will be an issue for the bank that provided their. It could be. Could be. My biggest regret is not shorting, but the thing is, I think a lot of people were already shorting it. So the short interest on Tattooed Chef, let me actually see real quick. I'm pretty sure it was pretty high. Last time I covered it, it was pretty high. Like, people were already betting against this company. Yeah, it's at 27% right now. Like, it's not crowded, but it's not like unknown. It's not like we're finding a company that no one's shorting right now, and no one knows it's bad, but we know it's bad. No, I think a lot of people know it's bad, and people like to dog on short investors, but I wouldn't dog on institutional money too much. They are well researched. They do have resources. I wouldn't say they're always right. That doesn't mean that, but they know what they're doing for the most part. So, all right. Fabio's community jokes becoming high school girls' lunch table. Yeah. Yeah, because the vernacular is definitely. S&P is going to drop on this news. On the Tattooed Chef news. Yeah, it's probably. All right, so that pretty much covers Tattooed Chef. So you guys were wondering, yeah, that's the Tattooed Chef stuff. And the next stuff that we're going to be talking about is Cole's favorite. So Cole, I want you to tell me what's going on with this next part. But yeah, pretty much we need to get into a certain college tour that's going on.
Yeah, let me pull that up. So it involves the channel Everything Money, which I think everyone in chat is familiar with at this point.
Yeah.
We had one of their former members on the stream.
Oh, and you were on the show too at the same time.
Yeah. So Paul, and I would love if you could put this photo of Paul up on screen.
Let me see. If you send it,
I'll send you just the photo if you want, whichever you. So that's the YouTube post, and this is the photo.
I can find it. I'll just find it here.
Yeah.
So what do I look up?
Everything Money, and then go to the community tab.
Okay, it's a community post. Yeah. So, and then I'll pull it up, and then you can explain it to me. All right. So what am I looking at?
So this is a Paul from Everything Money. He's no longer wearing his glasses that didn't have prescription lenses in them anyway. But Paul will be on a college university speaking tour in 2023. If you have connections at your college or university and you want Paul to come speak, email chriswolf@everythingmoney.com. I'm not sure if that's because nobody has asked him to come speak yet, and he needs people to ask. But yeah. So the comments were not happy about this.
Okay.
Which I don't know if you want to read. I don't know if you just want to read the comments, but my first question when I saw this was, what could he possibly speak to them about?
Look, to be honest, I have no idea what he would speak to them about. But
Yeah,
I think, isn't his intro like he's a teacher?
Yeah, he's a teacher.
Oh wow! So I'm looking through. So this comment got 36 likes, and then what was the response? Yeah.
Oh, is that well, I'm not looking at the stream. Is that Wombat's comment?
Wombat's comment. Who we got? Let's see if we see anyone. Whoa, I'm the top comment. Yeah, Wombat, you're the top comment.
Also, the Pikachu guy is in there.
Pikachu right here. Raddy right here. He's right here. Okay, so basically, what's the gist of this? So what's going on?
Well, no, I was just really, no,
Oh my
yeah,
gosh.
So nobody's on their side because one, so he says himself, right? He says himself that he doesn't run the businesses because he said he's not good at managing people. So he just,
Bro.
He just owns the businesses and he hires people to run it for him. So he's not gonna be able to talk to them about like running a business, and he doesn't buy any stocks. He just shorts stuff. So he's not gonna be able to talk to them about buying like stocks and stuff. So I can't. I think I saw a comment from their intern that said something about it. The talks will have to do with a mindset.
A mindset?
Yeah.
I mean, anyone can teach a mind. I don't know. Like that's kind of like, okay, motivational speaker, I guess.
Andy, how much is this time worth? Like 2,500 an hour or something?
Some no. Well, I forget what Seth told us back when he was on, but he said it was worth. I mean, I think it was like 500 per month, and that one consultation
You're talking
was
about the
the
we were talking about
10,000.
the 10,000 tier.
The
For like a
$10,000
four
tier.
hour like a 4 hour real estate call or something.
Oh, that's so cringe, but whatever. I don't believe anyone's paid that, but
Well, if you just want to read off some here, this person says they summed up the whole tour. Buy our software. It costs less than a cheap cup of coffee per day and will make you tens of thousands of dollars in the long run. Dollar cost average is the best strategy, but I don't do that because I have 8 to 9 businesses upstairs and can wait for prices to fall into unrealistic territories. That
uh,
sounds like a breakdown of the tour.
cancerous comments. You don't need the software. They show you the process in the videos. Going down now only means buy more if it's below your target price. Also, the analysis done in the videos term period, you guys completely missed the point. I mean, I'd say that the process is not going to be very successful, but
Yeah, some of the newer comments are like
this one, yeah.
oh, somebody said, yeah, you can tell from this comment section that the market still has a long way to fall. Or like something like that. I'm like, what?
Bro, I don't know. Some people, I don't know. All right,
And yeah, I
so
think that's the extent of that. Yeah.
yeah, that's the extent of it. All right, so we're done with this topic, and some people are gonna be like, yes.
Unless people in chat say something funny, you know. If you guys have any singers, you can always
Let's
bring
see
them
here.
up.
Was it confirmed? CM Capital Mindset reason why Seth disappeared? No, it wasn't confirmed. No idea. No idea. Absolutely no idea. Speculations, like we could speculate why, but no idea. So Financial Fit is saying EM has a great analyzing tool, but they just pull random numbers out of their $. Intel is losing market share and spending. How are you throwing random numbers in that analysis? I would even argue that there's issues with their.
Do you want to talk about that they bought Palantir?
Oh,
I'm sorry.
okay, yeah, that's something we didn't even.
Puts.
Okay, so I didn't even know this. I was at work and Cole messages me that apparently this is the thing. Why?
So value investors, I know you always bring this up, but shockingly, Fabio, value investors understand that companies grow and become profitable. So he's not just like, only buys profitable stocks. He knows Palantir is going to grow and be profitable. So he looked at the estimates, and if Palantir is making $1.80 per share in 5 years, that's a $29 stock that he can buy for like $6.
Oh yeah, and by the way, he's selling puts, like Bacon Memes, right? He's selling puts. Growth at
So
a reasonable price, Will P says, yeah, that's what we would call that. He's that kind of investor. All right, so basically saying he understands the growth, but I feel like there's a fatal flaw. Well, I think I messaged you what the potential issue is, right?
Well, your potential issue, Fabio, is that you don't understand that the value of a company is the value of all future cash flows.
You're just repeating that.
So, therefore, if they make money in the future, then it's actually a value play.
There's actually one thing heavily missing from that statement if you're investing in stocks.
What's up?
I'll tell you off camera, but there's a key part that's missing from that. Again, because just in case he's like, he's lurking or something.
The comments. I don't know if this had anything to do with what you were gonna say, but the comments, they were all, every negative comment mentioned the dilution.
Oh, okay. Well, that's where I was kind of going with that, but not entirely. I wanted to rephrase his phrase because there's a big part that's really missing from it. Because it's like, yeah, that's true, but that's like true for a business if you were to buy the whole business. So, yeah, in a general bird's eye view sense, the statement of the value of a business is the present value of all future cash flows, yes. Because but that's like misunderstanding. Like, okay, well that PV has some factors that you need to find out, and you could be wrong on those. Okay, so we do have the last comment. So this is going to be the last topic that we get into. By the way, I'm not forgetting this, but yes, the answer is yes. Okay, so I'm not well, I'm gonna get there, Fuhat, but yes. Oh, I keep misclicking. Yes. Investing calls it hilarious that they praised Palantir for positive cash flows, yet they didn't realize that 100% of that came from stock-based compensation. That is pretty funny if they didn't realize that.
I don't believe they did.
That is pretty funny if they didn't realize that. But I don't expect anything more from them at this point.
I want to say I'm genuinely proud of him though. I mean he picked a stock that wasn't he picked a stock that wasn't a company like several years ago and now is dead. It might still be dead, but he picked a stock that's,
well,
he went out on a limb, and I'm proud of him.
I think one thing that I found, I haven't made a video on this, and I feel like I don't really care to make a video on this, but the whole approval of Palantir for level 6 security clearance, have you seen that? I saw the craze on it all over the place. But if you see a lot of people making a really big deal about that in the first place, I don't think they know what that even means. Personally.
What's up?
Like there's been a bunch of people. I didn't get to see the videos, but I saw them. At least maybe I'm just misjudging by the title, but it seems as though they're making a big deal about the level 6 security clearance that Palantir has achieved. And making like, oh, this is like a game changer or whatever.
Well, it is a game changer. So
it's better, but like it's not as big of a deal as people are making it out to be for a reason, like because that's not. I don't, because I want to. If I talk about it, I'll make a full video on it. But just like everything is really segregated in terms of services that you do, and everything kind of requires its own form of clearance. Like, it's not that special in the first place. It really isn't. Xi Jinping isn't impressed. I imagine that someone in here, because I've seen it actually. There are some people on forums that will talk about it because they also got kind of irked by people making such a big deal about it. So it's not like a hidden fact or anything like that, but it's kind of just like it's definitely people who are very excited about it. They don't know how that really functions or like what are the implications of it. That it's good, but it's not like, oh my God, no one. This is like so unique. It's amazing. Capital Mindset, isn't it ironic that Bubbleson has a better understanding of cash flows than Paul Gabriel, even though he is... Okay, I'll tell you this. I will Joseph Carlson, if you're listening to this, I will 1 trillion %. I know he's not listening to this, but I would 1 trillion % give all of my money to Joseph, all of it, before I gave it to Paul. 100%.
Almost any big YouTuber. Do you know anyone over like 200,000 subs? That's
What?
Like we're super awesome. I guess there's like Plain Bagel.
Yeah, but if I was between those two, it'd all go to Joseph, all of it.
Yeah,
I wouldn't give a dime.
I completely agree.
Yeah, I would not. Maybe not outperform, but I would trust that Joseph would at least eke out a decently positive return relative to the market. Maybe he even does outperform too in some circumstances. So Fabio's a dividend investor. Look, I'll say it again. As always, I am never going to be opposed to dividends. I am not one of those. I'm kind of like everything works, whatever floats your boat. And I'll say it, I think many of you have heard me say this before. I believe the form of investing that keeps you motivated and engaged is the form of investing that you should pursue. As long as it keeps you going, keeps you excited, makes you kind of think about, okay, how are more ways I can maybe save more money, invest more money. If that's dividend investing for you, why not? Like, why would I, is it the most tax advantage or most tax advantageous in every scenario? No, but that's not everything that I would consider. Like if you were to do index fund investing, but you, like, I don't know, it's almost like, okay, maybe I take your money and force you to buy it, and then you can't do anything about it. Maybe that's more of the issue, but am I making sense, Cole? I'm trying to say
Fabio,
that.
Fabio, you famously say that.
I'm scared of what you're going to say. I'm terrified.
You famously say that.
I have no idea what he's going to say.
Good dividend-paying companies like the Nestle Corporation are some of the foundations
of every portfolio. Should be the foundation of every portfolio. Yeah. I always say that. Actually, I always say that Nestle should be the foundation of everyone's portfolio. Totally, because that's our sponsor. Sponsor today, Nestle.
But it has nothing to do with them being the sponsor.
Yeah, they're just that good.
In fact, the first seven times I recommended Nestle to my friends and family was not because I was paid.
The first 7 times, but the other times you're not denying.
Yeah. Just to start.
Imagine how many people come on to this or see this after the fact and have no idea we're joking. But if you somehow don't know we're joking, we're not joking. No, what am I saying? We're not joking.
There's gonna be some mass conspiracy later.
Oh yeah. Because remember, Strongman started that conspiracy that was hilarious. That people thought he was being paid by certain YouTuber. I thought that was funny. That people actually believe it. They still do. It's actually funny. Joseph or Sven though? Oh yeah. Sorry. No, it is 100% true. He gets paid $2,000 every month. Joseph or Sven? Oh, that's a hard one. Oh, I don't know, man.
I mean, with Sven, you're just gonna sell your whole portfolio. So.
Yeah, I'd say Joseph still because I'd honestly say Joseph still. Like if Joseph plows me into his dividend portfolio, yeah, he'll probably do better. I'm not even joking. Yeah, Joseph, you're seeing this. You're beating everyone right now in terms of
I was gonna just say it's surprisingly hard to lose money, investing your money with even a stupid optimist. I mean, there's the people who like blow up their accounts in like bubbles, but if somebody's just like, oh, Apple's at all-time highs, I think I'll buy more Apple. That's probably gonna work out all right.
Cause like I'll give him this. He buys quality. That's his thing. That's what I'm saying. He's a story. Way back when, if you go back to the criticisms on Joseph, they're just like he's a story-driven investor, and he is like the embodiment of one. Mm-hmm.
Everything money criticized Carlson?
No. I made a video going over his portfolio. Oh, by the way, Keithum, that's his story fund. His story fund was his like little thing, but that's why I said his dividend portfolio because it's like done, but like, yeah. So like that's kind of where I'm at. So like I would say if he was doing that strategy, I'd go for him over the other guys. Did the story fund, that'd probably be maybe a different. I don't really know. So if you gave your money to Paul, you would own 8 or 9 businesses upstairs. Yeah, that's maybe what had happened. Maybe I'd be like some mogul and
be uber rich. Yeah.
I'd be uber rich. Yeah, maybe, I don't know. I'd take Chris Sain's options. Oh man, no. No. You're saying no. Okay, so getting into some REITs, I am getting into REITs again. So I'm rebuilding some positions. My largest holding in REITs by far, and I held it all in my retirement account, specifically my Roth IRA, was Realty Income Delaware, ticker symbol O. So I'm going to bring them up. And I also own MPW in my retirement account. So if you guys were wondering, does he own it in there? Yes, I do. So I try to put all of my REITs, specifically my REITs, dividend payers, if I can help it, will try to go in any of my retirement accounts. But REITs, 100%, I try to put them all in there because the dividends are considered income. Yes, like income, like, from your job, from whatever. So it's the least tax advantaged form of dividend payments, because at least with and there's a reason for that, because it's not like you're getting completely shafted. Because when you get a dividend from a company, and let's say you qualify for dividend taxes because you're making enough, you're paying on the corporate level already, right? We have the corporate taxes, but then we have taxes on the individual. So we have something called double taxation. With a REIT, you're not paying corporate level taxes because the corporation pays no tax as long as they remain qualified. And then they pass it all to you. So you get all the cash and you pay the tax. So that's why it's not like they hate me, they're trying to screw me. No, it ekes out to about the same, technically still less when you kind of equalize it out. The total potential, the maximum potential of taxes on qualified dividends is still higher than the maximum. Well, no, because then there's like states involvement in a non-tax state, like a normal state. That's technically not true, but a normal state. I love saying it like that. But anyways, yeah, just looking at something like Realty Income, this was my largest one. And I made a video or a series of videos back in, let's not go 5 years, more like a year out, talking about the liquidity crunch. It was around in January, and why I sold my REITs, and now I could buy them all back, all the shares back at much lower prices. And basically, I printed money, guys. No, but it was some patience because there were moments where I was wrong. There was moments where, I remember getting comments like around here. It's like, oh, you were right about it. But then it's just like roared up. And then I didn't get any comments saying I was right about it. But no one was mean. No one was mean at all. And then it, fell back down. But these REITs, like these high quality triple net lease REITs, they took forever to show any weakness. I'm not even kidding. So it was just patience. WP Carey. Another one that's I really like is ADC. So Agree Realty. I'll show you the same chart. It's pretty much almost the same chart. So like this little trough here, then it peaked out recently in August, and then basically now lower than it was in, where's January? Yeah, January, right around here. So
yeah,
it is lower. That
strikes me as a head and shoulders pattern.
Yeah, definitely head and shoulders pattern. So with Agree, they're, I think, higher quality than O. I know that's very blasphemous, but I think so. You had a gun to my head, I'd pick Agree over O. And if you ask me, like, which one's higher quality, Agree is higher quality than O. But yeah, very blasphemous, I know. But O is still high quality. Like, we're basically picking among the titans of quality. And then if you looked at other REITs that we've gone over this before, just kind of repeating it yet again. So going back over the liquidity crunch, like something like Prologis, other ones that we've talked about, they kind of followed it to a T. Prologis was getting some overbuild exposure to these industrial properties. So again, I think it was like this. When was Amazon's report? Oh, no. I'm looking at the year. So this is that. This was the Amazon report saying we overbuilt. Yeah. So this was the big problem. But ever since then, just downhill for something like Prologis. Prologis is another quality REIT, by the way. Not to like ruin their parade. Another quality REIT. But a lot of these REITs, you kind of follow that same trend line. The quality ones, the triple net lease specifically, they just took a little bit longer to get there. But they're finally getting there. So I'm happy to start building them out again. And if you kind of think about it, it makes a lot of sense for them to come down just simply because the cost of capital is rising. I would say that you should probably see, as more like later down the line, you should see cap rates begin to adjust just because, okay, where's the let's say the liquidity within the real estate market going to come from? Cost of capital is rising. It's costing a bit more money to acquire the same amount of properties as before. So yeah, bit of a problem. So okay, so damn, they all just dropped like a mountain. Yes, Grievies, this is what we were talking about. Yeah, this is what we were talking about. So we've been waiting, and recently all of them kind of fell off the cliff. So not even the high quality triple net lease ones were resistant to it. I mean, I don't know. Let's even like, I haven't checked out this one in a while. ELS. There's another quality one. I would expect this one to be resistant, but let me see. Yeah, no, more recently. And look at this one. This one literally since January. It's you can follow the trend line. Let me see what's Sun Communities. SUI. Yeah, Sun Communities. There we go. I'm a yellow book of stocks. Heck yeah. Yeah, look, same trend line. AMT, American Tower, another quality one. Okay, so this one, you see, this one I'm actually not surprised that it kind of followed the high quality triple net lease, because they are basically that, but on to the nth degree, because the types of properties they do own. Very low maintenance, very low capital expenditure. Compared to some of these other properties. But yeah, there was one that I talked good praise about somewhat. Like, I was interested in looking further, and they had an interesting strategy, but it was, oh my gosh, they got annihilated. We can talk about that real quick, because might as well. So this one's Orion. So I did not talk about this one as a business in too much of a negative light. In fact, it was, I would say, moderately positive light. As far as interest, it never made it into the portfolio, because, and I'll explain why. There were some concerns. But first of all, look at this. This is a spin-off of O. So Realty Income. Again, just to remind you, Realty Income is O. High quality, very high quality. They merged with a company called, so this is, I'm telling you the story. They merged with a company called VREIT, I believe, is the company. But you guys can check that. Basically, they merged with a company. They grabbed all of their office buildings or office properties, primarily in suburbia. And these were single tenants. I think the grades range from B class to C class, maybe some A class. Point is, single tenant, triple net, suburban office space. All right, what's the problem with that? Well, in the case of O&L, and let's go back to O&L, let's actually go to their website, because I think it's really important to illustrate this, because you need a visual. So think of this, like Cigna. All right, there you go. Solid company. This is what the office building would look like. All right, well, some of their, or a decent amount actually, oh wow, their logo is oddly similar to L3 Harris. You guys need to check this out. Sorry, I'm just going to get sidetracked on this, but let me show you that they basically copied L3 Harris a little bit, not fully. All right, so use necessary cookie only. Kinda, like, look at that, and look at that. Kinda, like, same idea, same thing in principle. Anyways, going back. So when looking at Orion, they had a lot of leases that were coming up for renewal. A lot of people, or a lot of tenants, were like, yeah, nah, not for me. So they're leaving, and then what does that cause for Orion? Orion has to reinvest back into the property. That's a lot of CapEx. All that CapEx is risky, so to speak. Investors don't like that, or we shouldn't like that, actually, because that provides a lot of question marks, and especially going into, let's say, a liquidity crunch where, capital costs are rising decently, to say the least. That's going to present a bit of a problem for something like Orion, and they don't have the scale, and every single day or every single time this wasn't helping, because this is also part of their capital costs. Their shares are getting quote unquote more expensive, unlike let's say an earnings yield. You would really use a funds from operations yield, but whatever. You got the point. On an earnings yield basis, it's getting more and more expensive to issue shares, and at the same time, where debt is also rising in cost, something with Orion that doesn't have a proven track record necessarily, it's not a good time for them. So, general gist, no bueno. All right, so they've had a terrible time, and if you're thinking about buying this or bottom barrel fishing, I'd caution you on that. I'd at least ask you to really look into the risks before making a decision on that. I can, do my best and point these things out. And if you have any questions, we can always talk about it on these live streams. But yeah, I'll be buying Granite for my tax sheltered accounts. Yeah, no, Granite's another solid one. I've looked at Granite in the past. Solid. That one came out of Magna International. Let's see here. Fabio, do you know any much about REITs? But I had a family member that was invested in NLY. Oh no, NLY. Well, where they are in life, because NLY is a mortgage REIT. I know that one because it's usually one that people flock to for yield. I think that's the one. Maybe I'm wrong, but I'm pretty sure that is the NLY is that one. But you would think, yeah, NLE Capital Management. Yeah, this is definitely it. Yeah, dividend yield of 20-ish%. So you'd be hoping and begging for, look, I don't touch mortgage REITs personally. Not that like this is indicative of future performance. It's not, but you can see that, okay, that dividend yield of 20.75%. And let's bring up your, where's your comment? Okay, here we go. So let's kind of break this down constructively where we can, I can maybe help you walk you through like a general process to kind of think about this. But what should be self-evident immediately is that dividend yield, 20.75%. What the heck is the market telling you at that point, right? Should be saying red flag, something is wrong with this. All right. So then investigate further. And then you can read about, I'm just showing you through Google. So all this is like free, like what you're basically able to see here, free. NLE Capital Management is one of the largest mortgage real estate. Okay. So mortgage real estate. So it's not I'll just tell you, it's not a normal REIT, an equity REIT. So there's two types of REITs we can think about. And then there's also hybrid REITs. We won't get into hybrid REITs. I don't want to overcomplicate it. But there is actually, no, I don't want to overcomplicate. I wanted to tell you guys, no, focus. All right, so mortgage REITs, they do what you would think. They basically are buyers or issuers of mortgage in one case or another, and they basically just try to roll over and create new mortgages over time. And they try to raise capital very similar to other forms of REIT. So as long as they're generating the income, they also qualify for not paying the corporate tax, et cetera, and they're just yield machines. But one of the problems that they're like a bank that's not a bank, which kind of makes them, like I don't really like them. But they're not a bank, but they're like a bank in that sense. And usually, more often than not, almost all of them have at the very best been stable in terms of price and have just been, just spitting out good yield over time. In the worst, for a lot of them, they have not performed well at all, just simply because structurally they are very difficult. It's very difficult for them to perform well. And you would think, okay, rising yield environment is better for them. No, because if you go back to the videos where I go over banks, those are really good for kind of driving this point home. But the part, so banks, people think banks benefit from rising rates. That's not necessarily true. That can be true, not 100%. Like it's not always true. It's more complicated than that, is what I'm trying to say. And go figure, things are more complicated than what they initially seem. Like, oh, rising rates, that must be fantastic for X, and not so fast, right? It's not so simplistic. Now, for insurance companies, yeah, your rising rates are good. We've already discussed that. So that's why, like, if I had to go back, my best optimal strategy was to be load up more on insurance companies. Like, I don't know, like, I don't want to get too sidetracked, but let me just show you some of these guys, right? Like Cigna, like not all insurance companies are created equal. We've also gone over that too. But yeah, like disgusting. 1 year performance, 44%, was already a big business, was already quote unquote at a premium. It's been doing even better and better and better as they were able to roll over the premiums into better and better yielding assets. And the expired assets or the matured assets, they were able to roll that over into better yielding assets. Like fantastic for them. And then, you grab the other ones, UNH, United Healthcare. The healthcare ones did even better. But yeah, look, like this one was already a huge company, 23%. That's destroying the market because the market, you got to keep in mind, is negative for the year. And some of these are positive. I don't know, like what's another car insurance? Let's do a car insurance one. Or Allstate. I think Allstate's one of the worst performing ones. Allstate. All right, year to date. Yeah, 10%. That's 10.87%. That's destroying the market. Because remember, the market's down like 20%. Progressive, PGR. I think this one's doing pretty freaking good because this is one of the best run ones. Up 20%. Market's down 20%. You get what I'm saying? So it's not coincidence. These are doing really good. Rising yield environment. So you should know that for next time. But like that's why my Unum position has done really well. And going back, we should have been loading up on these, but it is what it is. to get rid of exposure to stuff that would not do well, like again, BAM, it was a good move too. But yeah, so that's kind of what's the benefit of having a good diversified portfolio of players in different areas. All right, anyways, NLE capital management, no, just so rising rate environment. I think the initial thought in retail might have is like rising rates. These guys sell mortgages. That's good for them. No, lending growth is very important, just like banks. But like they're not banks. They're like they got the worst of both. I saw that you were responding and saying elderly 60s. So usually maybe I don't know if they spoke to a financial advisor. Sometimes I've seen that financial advisor would recommend this because the yield and like you're kind of getting to that. But I don't think that's I don't see this ever being a part of, like, for example, my grandparents' portfolio. I would never suggest it for them. So, yeah, I wouldn't go for this. There's other ways to achieve yield more responsibly, and focus more on capital preservation, and then maybe kind of considering some sort of like short duration bond strategy to kind of conserve cash, lower volatility, etc. Because you don't want long duration exposure there because that comes with its own problems. Although right now, I shouldn't discuss that. That's not good for public.
Yeah, Fabio.
Yep.
Don't just be talking about this stuff.
Yeah. No. I almost went into something probably. Anyways, I've been just ranting. How are you doing, Cole?
Not good.
You dying in the game?
Yeah, it's 2v1. I don't know what any of my teammates are doing.
Wait, what game is that?
Also two of the guys have like really bad internet, so the whole game's like lagging.
I didn't tell you. I was playing a game the other day when I was done with everything on the weekend, and someone recognized me.
Nice.
Yeah, I was like, wow, small world. So I don't know if he's watching this live stream now, but yeah, shout out to you. You know who you are, and you know what game it was. But they recognized me by my voice. What
game was it?
Oh, it's a small community. If I mention it, a lot of people will start coming on there, and then we'll probably run into each other. You know which one it is. It's the only one that I tend to.
Jeez, you're the stupid game.
Yeah, yeah, you know what game it is. Yeah. No, it was not that game, Julius. But I didn't even know that was a game. Apparently they're asking if I can make a brackets for people to bet on for YouTube investors. Bro, I don't know, man. It's we can definitely do it. Fall Guys. What's that? Fall Guys. Who are the Fall Guys?
Shut up, Bobby. Shut up.
No, genuine. I'm that uncultured. I know that there is a reference to them, but yeah. Boomer, I'd be down. All right, Boomer. Oh my gosh, I'm being called the Boomer. Wow. This is what I get. CAAC, so Cat Guy International. I think that's that one. Nothing but good things to say about Cat Guy last time I remember. But CACC, I think that's Cat Guy. I think that's a military defense contractor, if I remember correctly. No. That's got them mixed up. No, this one I have nothing good to say about that one. Oh my gosh. Nothing good to say about. Wait, did they do a stock split? What the heck is this? No. This is messed up. It's not. Yeah. Okay. I was like, yeah. No. This is the one that I even said if I felt like shorting something, I would short this one. I'm not saying anyone here should short this at all. By the way, be very careful. But if I had to short something out there, well, back when we talked about it, because now it's actually down. But why this is such a, I don't know, is because the vast majority of what's on their books is subprime auto loans. That is like the last thing you want exposure to here. But it's like their entire portfolio. And I think this is like Super Investors, one of their biggest holdings. But the thing is, you got to consider the duration of which that Super Investor invested in this. So like they've done fantastic. So during a boom, I think that's the context was they invested back right around the Great Recession. So they've done well, good for them. But I'm saying like right now is a different story, at least as an onlooker. If I was forced to short something, back when I spoke about it, I would have shorted this. But I don't generally short. Yeah, I should have. I should have done that.
Tattooed chef.
Yeah. Oh, well, tattooed chef, you'd have to see how expensive it is to short it. Even buying puts, sometimes it doesn't make sense if you want to buy a put and like the premium is ridiculous.
Because of the Kelly OG video, as a joke, I was like, oh, I'm gonna buy Netflix calls before earnings. Dude, like 20% out the money is like stupidly expensive.
You know what that means? People are.
It means buy puts.
Yeah. Means buy puts, short it, straddle it, and then excavate it.
Yeah, really just do anything.
Yeah, just do whatever. You also said that, don't mention their name, but there was someone who predicted a lot of things and none of it came to pass and they still bought puts.
Yes, they made the boldest prediction possible, and they made sure to point out, they're like, guys, this is probably not gonna happen because it's such a bold claim, but I have to make this video as proof. And then nothing they said happened, and they're like, okay, guys, I'm going ahead with it.
All right, that is actually a strategy, I guess, that person might end up employing frequently, and then just keep on making those videos, and one day it actually will come true, and then they're going to point to you, see, like I told you. All right, and Andy, I see your comment, and I will look at both of them. I'm writing them down right now, the tickers. EHC and VSAT. No, it wasn't Jake Bro. No, it wasn't him. Even though I don't really know who Jake... Oh, no, Jake Bro is a credit... He does stocks? I was like, that name is familiar. Okay, no, I think he's been mentioned before by other subscribers. I knew him for his credit card stuff. I never seen his stock stuff, but I stopped watching credit card stuff because when I was younger, I had like a little bit of a credit card craze phase, like, oh, where can you optimize and stuff, and now I just keep it simple, stupid, KAS. S, I forgot the second S, and yeah, I just go with my Bank of America credit cards and just like get the fat cash back. Like my wife's more like getting into the Amex stuff, and I'm like, I'll stick to my no annual fee cash back, thank you very much. All right. Anyways, we're not talking about credit cards. It's not that kind of video. Capital Mindset, has anything changed for you in regards to the views on energy stocks? That's not how you sound, George. I'm just putting my own spin behind your voice. I personally added more to IXC, and oil briefly dipped below $80 per barrel. I have a 5-year plus investment horizon. So 5+ year investment. Well, I think like, for example, Buffett, what he's kind of envisioning, and I think like my view is like more medium short term is like that demand destruction, but I think Buffett's kind of looking at it also from that perspective, 5+ years, because there's been a lot of severe lack of investment in oil infrastructure. For better, for worse, ESG thoughts, governments, or fear of government cracking down, or fear of government doing X and Y, has led a lot of companies to not desire to invest in more oil production. In fact, maybe they're going away from that. So that's a bit of a problem if we don't actually have an alternative, which we don't really have a viable alternative to replace all of our fossil fuels right now. Like if we were to do it tomorrow, I think a lot of the world would, not burn, freeze or starve. All of it, all of the above. Go back to the dark ages. So, yeah. And so that's what I think you have going for you, is a lack of capital investment that's occurred. Now, just keep an eye on that, and how's that changing? But I think that's on your side. That's what I'm trying to say. So like I could be back in energy, but like I want to see if my thesis kind of plays out. I made my money. I don't want to be too greedy. I could have kept all my ConocoPhillips. If you guys recall like how much of my portfolio was ConocoPhillips, it was a decent chunk. It's like the third or second largest holding. And it grew to that size. So like, yeah, we did good. So I just, wanted to take profits there. Okay. So Jake lost a lot on options 2 months ago, like almost all of it. Yeah, that sucks. I don't wish that upon people. He waited for the options to rebound and it never did. So Jake's credit was just transparent with his losses. He told us his plays were idiotic in the end. So you see, like, that's actually, I don't know about, how do you feel about that, Cole? You see this story? So there's a YouTuber, I knew him from credit cards, Jake Bro. but apparently he got into options, and he did some degenerate options gambling. He lost it all, and then he concluded with his audience. He walked his audience through the whole thing. He concluded with his audience that it was silly in the end.
Well, I have two things. One, I think you said something like you don't wish it on him, but I think much better that he lost all his money than he like made $1 million and he's like, wow, I'm a genius. I should put way more money into options again because it worked out so well. So that's always very dangerous. And when somebody does something stupid and it works out and they can convince themselves that they were right to do it, that's very bad. Usually ends poorly. But then secondly, about the guy, we said, he made these super bold predictions. None of it happened, but he still went through with the buying puts anyway, despite the fact that his entire thesis was destroyed immediately. I think what happens is, and there's a name for it, but I forget it, but he spent that whole weekend before the market opened. He spent that whole weekend picturing himself making like millions of dollars buying these puts. And he saw that as himself so much that when his thesis didn't happen at all and he was wrong, he was so hell bent on buying these puts and getting rich that he did it anyway. And that's also super, super dangerous when you're so convinced that you're going to get rich from something that you just ignore everything that could possibly prove you wrong.
Yeah, well, let's just say I won't be giving that guy any of my money anytime soon. But
well, you can for $50, but you personally won't.
This person will remain unnamed because they, from all I know about them or what I've learned, is just degeneracy. So, Capital Mindset, there are YouTubers that weight credit cards for their assessment. Wait, there are YouTubers that weight credit cards for their assessment. Really? Well, I did see that because, like, I think, like, okay, but I'll admit, like, there was a time where I kind of, I shallowly cared about that stuff, where I care, like, oh, the card has to be met. Like, no, like my, I don't have it with me, but my wallet. But, like, I don't care that it's like a plastic card. There's even like a service because people care a lot about that, believe it or not. I mean, you guys probably know that there's like I never did this, thankfully. Oh, it wasn't like that. I don't. Well, no. You know what? If that's what makes you happy, do it. And you want to spend your money on that, who am I to judge? But there's a service that like allows you to replace the card and with whatever kind of metal material you would want. You can decorate it whatever and have whatever custom logo. It's like, okay, it's a credit card. But that exists because like there's actually demand for that. And I think there was a guy by the name of a Credit Shifu who like was showing off that. What was that?
Yeah, no, Shifu.
Credit Shifu?
Yeah.
Yeah, he's a big YouTuber in that space. So I like to keep it simple. I have grown instead. Well, like me and my wife, we differ on that. Like, she likes the MX, like different special cards, whatever. And then I'm just like, I have my one card, maybe multiple versions of that one card, and then just optimize the cashbacks and the categories, and you get. Well, you can get. I've kind of shilled Bank of America in the past, but you can get. By the way, I'm not like I don't get commission for saying this at all. Like actually, one of you asked me. I remember one of you messaged me and saying, "Hey, is there like a promo code? Because you always talk about Bank of America." And I found there is none. There is no promo code. So if you like the bank, you like the bank. You don't like the bank, you don't like the bank. But I'm saying I like the bank for that reason. There's other banks that are really good too. So I'm ranting too much about banks. Anyways, this is not a video about banks. I did see someone ask or mention, would I choose PPC Ian or Joseph Carlson to manage? Okay, I would choose PPC Ian between the two.
I don't know who that is.
Ricky. Fabio is a BAC shill. Yeah, I know. And I should own BAC, like just because I'm so much of a shill.
Well, Fabio, we should mention when you were at Bank of America, 14 years ago at this point.
Where's this going?
trying to buy credit default swaps on mortgages, and it said Fabio, we're willing to offer you 5 million in credit default swaps, and then you looked at them and said, "Can we? Is there any way to do 100 million?" And then the rest, as they say, is history.
Yeah. I shorted the housing market. Oh my gosh. Yeah. Fuhat's like more recently, that's kind of right. That's kind of been true. I got a question about BAM and also Blackstone. Well, say I like holistically what BAM's all about there. But I can also say that Blackstone, I gotta appreciate Blackstone for what it is. And by the way, you know what? I'm gonna do you a treat, Fuhat, because you're gonna love this. You're gonna love this because we're gonna talk about BLK. Oh yeah, Fuhat's right now. He's getting excited. He's flipping his keyboard. He's flipping his table. I don't know. He's smashing his computer because we're talking about BlackRock. We'll talk about Blackstone as well. But why the fuck are we always talking about Ricky, come on. This is part of the capital mindset lore at this point. We have well, I'm flipping you off. We have a good chunk of the audience. Not a good chunk. We have one audience member in particular who's very motivated to steer the discussion over to BlackRock or Brookfield or Blackstone. As long as it's one of those three, this individual will be happy. But anyways, looking at BlackRock, you are now, Cole, would you invest in BlackRock?
I would look BlackRock right in their faces, and I would say, is there any way to do 200 million?
Okay, so you got that here first, folks. He will ask them if he could have $200 million worth of shares. That's what he means. He's not shorting the housing market. But yeah, it's pronounced. I am not saying that, Ricky. You almost got me to say that because I read the comments. All right, so I don't get what you want to do a video on BOC because the market cap size, but can you just swing one quickly for the boys watching right now? Tell you what, JP, I will do. I don't want to make it a habit of this but I'll do a Discord exclusive because that's like small enough. I'll do Discord exclusive for BOC because of the market cap size, but I will do one. That way it's small and isn't out there, but it'll still be published on YouTube via YouTube. And if you want to share it to someone, you decide to do that. I don't care, but I'll just give it to you guys that way. All right? Yeah. Okay. Date and time. Gosh. All right. We're gonna do this. Next Saturday. It will be, or before then, but up till next Saturday. I have until not the coming Saturday, the Saturday after that. That's my deadline. That's my deadline for that video. Yeah. When are we going on our date? All right. Well, anyways, you guys got it out of me. There we go. It's happening. Be sure that JP...
Fabio, I think some people wanted info on if you got those reservations at Dorsia.
Mm-hmm.
You did? You got the reservation at Dorsia?
At what?
At Dorsia.
Why? What?
Yeah, it's very hard to get a reservation there.
Was this a restaurant by you?
You can just move on to the next topic.
You were trying to get me to say something, and I was supposed to fall for a trap. Wait, no. Say it one more time. I gotta process this.
No, there's no hidden word you're gonna hear or anything. Like you either get it or you don't.
Wow. Yeah, no. I'm telling you guys. Is that like I'm getting boomer. Yeah, so I'm guessing it's a cultural reference that I'm so uncultured not to be exposed. Killer Mindset, just be sure that JP has a link. He is a free Discord member last I saw. Yeah, so I'll make it like available for just everyone on Discord. Just for that video. But it's not because it's something that it's not like a call or anything like that. Yeah. So let's see here. Oh yeah, I was talking about BlackRock. So I don't know. I'd feel like I'm not like opposed to buying BlackRock. It's not. I don't. I just don't. I don't know. I just don't like it as much. They're trying to make strides really strong. It's very competitive. It's like a race to the bottom. I think they were at over 10 trillion in assets under management, or AUM, but I think AUM's come down a bit. I know that they are making new initiatives for technology, investment technology services, and I think that's exciting because that's going to bring different streams of income. But let's kind of see American Psycho. Oh no, I've seen the movie. I just haven't seen it enough, I guess. It's been a long time.
Watch it, dude.
Yeah, no, it's been a really long time since I've seen American Psycho. I'm talking like probably, wow, like 9 years ago. Anyways, so BlackRock, yeah, P ratio 14, dividend yield 3.68%. Looking nice. Looking nicer than it has in a while. Let's just say that. Now, you can see that it's trading back to levels, I think, in 2020, around there, but it's not at its all-time low. It's all-time low for the 5 years or so is about, 354. Will it get there? I don't know, but I would be lying to you if I said I wasn't interested in buying around those levels, because I do think over time there's going to be a greater flow from active investment to passive investing in the form of index funds. BlackRock offers a huge amount. The real money is going to be made in like the retirement portion. Like when you go to your company, they're usually working with one of these asset managers. Like your company could have your 401ks in BlackRock or in Vanguard or in State Street or in Fidelity, Charles Schwab. It could be in any of those. So really, I think that whole industry is going to continue to grow. But we'll see. Then the other one is BX, Blackstone. So I recommend everyone kind of looks up the history for yourself, because I think it's a good read or a good, snippet of like where these companies came from. But Blackstone is now bigger than BlackRock, which they've been kind of, or their stories are intertwined. Let's just say that. And it's not coincidence that they're so closely named and they're both asset managers. They both have different strategies. Blackstone used to be a limited partnership. You want me to actually look at the Aladdin's page? All right, hold on. Let's go back to here. Let's go to, because this is Fuhat's like baby here, so he's gonna be upset with me if I don't go to it. Here we go, Aladdin. I accept. All right, Aladdin is now taking over. So see why BlackRock and hundreds of other investment professionals turned to power to Aladdin to work smarter, not harder. The clarity to act complex world, more than an investment software. So this is what I was talking about. But yeah, this is the name, Aladdin. Brings clarity and connectivity to the world's financial ecosystem. And Fuhat did a really good write-up of this in the write-ups portion of the group. So for those of you who have access to it, go check it out, because it'll give you a good idea at least of what's kind of going on. But anyways, when you kind of go through this is the most exciting portion that kind of separates BlackRock from the likes of State Street and all that jazz. And also kind of going into why when we compared a certain YouTuber's startup that with AI and all that jazz, a lot of these companies are already working on that. Blackstone also has one too, but BlackRock, this is going to be like commercially available. This is a huge potential growth avenue for them as asset management software becomes bigger and bigger and bigger. Like a lot of people don't know this, or maybe a lot of people, I think all of you guys know this, but a lot of people out there don't know this when they think about these companies. They have huge software teams at their firms. They do invest a lot in software. So they two other guys I have included. Oh, you're not done. Yeah. So okay. So you're not even done writing it up. That's crazy, because I think it's already a lot of content. But I mean, have at it. That's the place for you to express yourself for sure. And then we'll all look at it and see. Kevin Mines actually look at Aladdin's page. So yeah, we're already there. And then you're saying I'm not done, referring to the write-up you've done on BlackRock. Can I have my own PLTR? Yeah, you can have your own PLTR. Everyone gets one. So Blackstone. So yeah, I think that this is something that you should really look into. But yeah, it's I think personally one of the more exciting portions of BlackRock. than just simply the asset management. The asset management is kind of like a cash cow. This will improve their own operations and improve their other customers. And the margins here are going to be ridiculous. It's going to be ridiculous. So the opportunity is huge. Okay, so I do want to cover Blackstone, but Blackstone real quick. Blackstone used to be an MLP, and they switched over to a C Corp. I think I can map it out, but it was like around here-ish when they switched. And it's been a fantastic investment for a while, but this is the one that I'd actually be interested in buying at the good price. And you actually get a decent amount of exposure to real estate, by the way. So this is kind of like a REIT, but not a REIT. Money managers coming out of recession considering buying AB now as a recovery play. We'll talk about AB in a second. Okay, but anyways, finishing up Blackstone. I'll put up AB so I don't forget, because if not, I'm going to forget. Okay. Already one thing that I already see there are limited partnerships, so that kind of already puts me at like a dividend yield, very high yield, because they're basically paying everything to you, the shareholder. They're like a pass-through entity. So, I mean, I'd honestly investigate the stability of this and how. No, this is not the high frequency trading one. No, this is another one. That was another one, I believe. But anyways. Let me go back to BX. Yeah, so this is kind of like a way to get a huge exposure to real estate without actually buying a REIT. And I get this question from like Europeans a lot because Europeans don't get the same tax advantages. So this is a way for them to get a publicly traded company, invest in real estate, but not through a REIT. And that's actually something people are actually interested in. And then I'm trying to remember the other one, Brookfield Asset Management. So this was the other one I was asked about. So Brookfield Asset Management, holistically, this is, I use this word a lot every time I mention this, so I'll do it again because why not? Jap Gill, we did discuss that. Yes, that is correct. But yeah, Brookfield Asset Management, they call this the mothership. And yeah, and I'll repeat it once more for why that is. So you see investors, you can see that they have all these different businesses that they are both running and investors in or owners in. And they also, by the way, own Oaktree or a good portion of Oaktree. But for the most part, what you have to kind of gather from this is you could invest in any of these individually, or you could just invest in what is known as the mothership. Bam. And you get the same benefits. I am not of the opinion that it is a quote unquote trash company like one particular Canadian says. I don't know if he's still in here, but this one particular Canadian is of the belief that this company is trash. I am not a believer in that. And this company is so good that they were able to secure 50-year notes or bonds, better said. Think about that. Who lends to that? Well, Disney has secured one. I know that. And I know Brookfield did. I don't know of many others that were able to do that. Okay, so covers pretty much that. But yeah, AB, I don't really like the structure right off the bat. Performance-wise, it's done but granted, great financial crisis. So like, but let's kind of skid over that and just go from then onward. It's 162%, not including dividends. So it's probably done, decently well as far as total return goes. And yeah, so my question would be is like, okay, how stable is their dividend? Probably a dividend policy of sorts related to how much earnings there are, which I would think is they're going about it. If I had to guess, I don't know. I'm just like guessing from the surface. And if that's the case, okay, that's pretty sustainable. Then my question would go over to, okay, well, how is their business doing? How is their AUM going? What do they focus on within asset management? That's like a very broad statement. Like, what do they do? We can probably find that by going here, going through this, going responsibility, investors, media, insights, our firm. Let's go here, our firm, about us, leadership. Give me that. Fully invested in your future. Of course you are. Asset management. What do you do? At a glance. Okay, so 647 billion AUM. And then I'd kind of want to see how that's grown over time. If it's shrunk, if it's grown, etc. Okay, employee don't care. 51 locations, global firm. Yeah, basically global reach, etc. Blah, 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 blah. Our clients, responsibility, insights, our firm. Going back. Okay, so this is the research that they sell at a glance. Okay, cool. Wealth management. This has been a huge grower for something like Bank of America. There I am, shilling. Wealth management's been a big grower for a lot of these different businesses, but yeah. So I'd be paying attention to AUM. How's that AUM going? What do they have to tell me about this? It's just the same stuff. Yeah. Anyways, that covers that one. Oh, he's here. Oh, yeah, there he is. It's trash. Yeah. Look at T Rowe Price. All right, we'll look at T Rowe Price. Because in the same context of asset managers, T Rowe Price, this is the GOAT, or the ram, so to speak. All right. But anyways, I think this one's like a favorite among some dividend investors right now to accumulate. 4.89%, PE ratio of 9.47, a market cap of 22 billion. Max, it's done actually pretty well. It's come out of the great financial crisis pretty well. All right, so total return 10,000 without dividends, which is insane. And then let's I'm actually curious. Let's see what let's go to the peak. Oh yeah. Oh, okay. So if you invested all the way back then. Oh, and I'm just gonna say this as a joke. It's an inside joke, but guys, look, it was under $1. This is why penny stocks work. If you guys get the joke, you get the joke. But there was a YouTuber who said that. That, by the way, if you're newer to the markets, I don't want to it's not to offend you if you thought that. So I'll explain. I'll go ahead and explain that part to you too. But basically, if you're looking at it back in these days, the reason why it looks like it was a penny stock was because there were stock splits, right? So that's why. So you probably have a more refined memory on this, right? So you go to Tesla, and then you go to Max, and you look back here. Like Tesla wasn't $17 back then. You can even remember back here, like Tesla wasn't, $200. It was like $800. So yeah, that's kind of why. So back here, Tesla was not $1.28. It wasn't. Okay. But anyways, just want to mention that real quick. So T Rowe Price, same kind of metrics I'd look for is AUM. Okay, let's kind of see what Google's telling me here. So revenue's going up, but at the same time, this is just showing 2021. What do we know about 2021? Assets should have gone up. AUM should have gone up for two reasons: more excitement. And also asset prices as a whole have gone up, so that should generate higher fees for the company. And going over to their website, we can see again what they got. T Rowe Price again is going to be very competitive, trying to compete for those retirement accounts, workplace retirement. This is what I'm talking about. This is a gold mine. Personal investing is not that, but workplace, gold mine. Sponsors and consultation. Good. Financial advisors, this is like more traditional, what people think about. But yeah, no, this is the gold mine. This is but very competitive, but lots of money in here. But yeah, it's what it'd say. How's their AUM doing? Race to the bottom for some of these things. Wish you can edit comments on here. No, yeah, and people don't know this, but I can see your comments even after you delete them. So because of the software I'm using here on the side. You can't hide from me. But if you delete it here, I look at both chats. So if you delete it, I'll respect it. I won't pull it up. Anyways, Paul's just trying to. Oh my gosh, what is this commentary? Do you see this, Cole?
Nah.
Cole's focused on the game now. Kingdom just cuts you to your soul. Yeah, that's true. Look at T Rowe. Okay, I already went through that. I saw that I accidentally skipped a comment on BAM. Yeah, Rookie's comment here. What is your favorite management team in semi space? AMD, Qualcomm, Nvidia, other. I go with AMD, Lisa Sue, but that's a vanilla answer. So because if I remove AMD from it, I think Qualcomm's making better moves in some cases. Qualcomm's management's pretty ruthless. Nvidia's got more of a celebrity CEO than Qualcomm does. And then AMD, forget about it. I think people foam at the mouth when they see the word or say the word Lisa Sue. They start foaming and collapsing. All right, so more commentary about that. No, it has its use cases, but I would say that just like most metrics, it's not broadly applicable to every single company at all. But I'll do a video on that because I saw that you asked me. I haven't had the time because I was really busy. I saw that you messaged me on Discord with a question I'll get to answering your question, and I'll respond to you. But I just haven't had the time yet. But your question was good. I think I might answer it via video, and then I'll kind of combine it with this. Because I think other people might be having a similar question. If not, I'll just type out a response to you. Because I'm going to be closing off soon because we're at 2 hours and 17. So it's getting to the point because I don't want to make these too long, guys. Too long, it's unbearable to watch. BKCC, not this video. AutoZone or O'Reilly. I'm telling you guys, eventually you just become a yellow book of stocks. But, geez, that's hard. Both are great. Yeah, you see, okay, finally we get some appreciation for Qualcomm. Okay. I think O'Reilly. Go with O'Reilly. It's a hard choice. But yeah, thank you for the appreciation for Qualcomm. He is a Chad. All right, so with that being said, guys, I'm going to be closing it off now. If you guys enjoyed the video, only if you enjoyed the video or live stream, if you had fun while you were here, feel free to leave a like. And lets me know that you guys like the way I showed things, I talked about things, the organization of things, the topics covered. You didn't, so if you didn't like it, you can dislike it. That's fine too. It doesn't matter. Whichever way you choose. Also considering high yield bonds now could bounce nicely coming out of recession. HYG is a buy now. Well, Fishman, I've talked. I'm disliking. I've talked about trades that we could make if we have a thesis surrounding like bond yields are going to be coming down. There's different ways that we can make money, but yeah, it might be one way. Andrew Marshall, your thing changed. I have a decent enough memory to know that your thing used to be green or gray. Now it's blue. I wanted to discuss with you smaller retail investors should primarily look at smaller market cap stocks. I think outperformance is better. Such opportunities are there. Yes, but more difficult. Very true, but more difficult. Yes, I've actually, you know that I completely agree with you because I've stated that this very same idea before in other live streams and in the calls. So, yeah, we have no disagreements whatsoever. But I'll add the caveat that it's more difficult. So, always you're going to get market-beating returns if you pick a good small cap. Of course, you're going to probably get the best returns of your life. But they're hard to find. And then it takes more dedication to know the business because you're probably going to experience, I don't know, more doubt because first of all, the research isn't readily available. You're going to have to do a lot of the legwork and you're going to have to understand the business more. Well, you have to understand business either way, but I'm saying like there's not as abundant of information. It's not as well covered, but also it means not many people are hunting for that. So that's the point you're kind of bringing out, which is why I agree. When I discuss this topic in the past, it's usually been around that. And like there's a lot of trash out there, but it's shifting through the trash and then kind of like one of the stocks that's performed amongst the best in the speculative. I think both of them were like for example, Barbecue Holdings was a small and that performed really well. And it got acquired. And then we'll see how one of the other ones performs. And then I have another one that was found, and it was an interesting little bet, and the market believed it was going to go bankrupt. And that one was fine. And funnily enough, the speculations that are performing terribly are the larger cap ones, Zillow and Overstock, where there's a ton of available information. But those are only because Overstock's gone, but Zillow's like just because it's a bundle of potential. I've discussed before that there's a better version of Zillow than Zillow, but yeah, it's and Rick Holdings, like that one's a small one, but that one's a very well run company, and like I should have taken it way more seriously but I think we all now appreciate a lot more. So. Your thing used to look green. Mr. Fabio, Mr. I don't have a horn. Yeah, no, I'm serious. Like the A used to be green or gray. I don't know. What about PayPal though? Are you planning to start buying it? No, not if unless it gets to like maybe 70 and under, because I'm content with GPN and focusing on building that because I don't want to overexpose myself to a certain sector. But yeah. Oh, okay, yeah. There's a bit of delay, so I see your new question just came in. So yeah, there you go. You got it. How rare is it to get? Pretty rare. Pretty rare. Yeah, that's not normal to get 398% return in 4 months. It's pretty crazy. I have not heard about that. That's hilarious. I don't know where that company's from, but I know the competitors are Canadian companies. Fishman, I love it actually. The 2022 model has a lot of improvements over the older one. The interior is a lot better. I feel like the quality is a lot better, a lot more build quality. When I got this one, there were no panel gaps. I inspected all the interior, made sure like the seams were good, everything was good, really solid. And of course, I mean the driving experience is like it's on another. It doesn't feel like a car. It doesn't feel like a regular car. It's very fast, faster than I could ever want it to be. Has a lot of nice gimmicks. They are gimmicks. I'm gonna grant everyone that, not for a moment. Like it has the little dance feature where the car dances. A little toy stuff where you can do like a fart thing. It's gimmicks. But no, I like it. I'm happy. And I got in a color I really like this time. So yeah. Before I got standard color, this time I paid up for a color that I like. I got my favorite color. So whatever happened to your interest in the Polestar 2? Well, at the end of the day, the Polestar 2, good car, good UI. But Tesla at the end of the day was going to support the UI longer than it seemed Alphabet was, and the range was a factor for me. The Polestar was way heavier, which is to a benefit for safety in some regards. But yeah, for me that there was more surety with the Tesla actually than with the Polestar. And the range really was a big deal for me because with the range I get the long range on the Tesla, and it's good because I don't want to be it's called range anxiety for electric car owners when you're like, oh, I don't have enough to go to point A to point B because with the Tesla I've never had that fear. But yeah, that kind of what happened. That's kind of what happened. What color my brother has? That's the one I have. They actually changed the blue, so it's a little bit of a different blue, but it's nice. Okay, now you're back. I was like, Andrew, I don't like change. I like things I'm kidding. I often surround myself with Polestars. I see what you did there, Ricky. That's funny. Let's see here. Rue Brothers. Yes, the Rue Brothers. So many of you are from the OG days. You guys basically are the Rue Brothers. Let's see here. Yes, I already answered that. The blue. Yeah, I got blue too. Have you checked any funeral stocks? No, but there's three major ones. There's Service Corporation. I forgot the other ones. But my brother invested in funeral companies under literally COVID, and he did really well. Andy, I don't know if that was an accent to ask the question, but to the answer that not until it reaches like 70 and under. But I'm more focused on GPN because I don't want to increase the exposure too much. WTF is Rue Brothers. You'd have to be an OG. Well, no, it's just like it's like the one of the original groups that were a part of this. I think that's more of a benefit than a detriment. I don't know if that's a harm to them, but yeah. So someone's talking about Sandstorms. You mean Insurgency Sandstorm? Oh boy, that's a good game. Not gonna lie, that's a good game. All right, with that, last minute questions, and then we're closing off. Just making sure I'm checking both softwares. But good questions. I think we're pretty organized. If you guys like, again, this organization, let me know or dislike it. If you dislike it, let me know too. Are we done looking at stocks? I found a stock that could be interesting. All right, we'll look at this one last stock, Andrew. Dan Roof Sandstorm.
Yeah, I also thought we were talking about Day or Day.
Gosh, how many references am I not aware of? How old is this game?
Apparently a lot. I mean, that's a classic reference.
Well, how old is that game? Could just be an age thing.
Jeez. Oh, gee, you're a fun one, Fabio.
But I'm not lying to you when you told me that celebrity's name and I didn't know. Like I don't know a lot of these things, man. Could just be because I'm from a different country. I don't know.
Yeah,
Blaming it on
I usually make fun of people for their
Yeah, you can't
race.
make fun of me,
not-
Cole. If you do that, that's kind of it's questionable, man. Don Fabio Boomer, yeah. Christ. Yeah, I'm gonna get ratioed now because I don't know these references.
Ratioed.
Oh no, I found out there's a really, oh my gosh, I'll show you this song off camera, but it's a crazy song. I didn't even know. Road. Wow. What? All right, I'm gonna type that here on the side just in case. Just in case. What kind of stock is this? Okay, construction partners. Oh, I can kind of. All right, I have a feeling I know what this is about. All right, 1.4 billion. All right. Oh, it's not didn't IPO too long ago. It's already done pretty well. It's outperformed the market for sure. Let me see. Is this like an actual Gen Core, but like way better? Like much more friendly? Wait, are they structured? They're not an LP. No, yeah, they're not an LP. Roadworthy, leading infrastructure. Yep, infrastructure spending. That's the bet. But specific. Yeah, I feel like okay. So basically, really cool find actually. I'm gonna have to take a look at this because maybe they're like a better version of Gen Core, like an actually shareholder friendly version of Gen Core. You hear me, Gen Core? You're not shareholder friendly because you're not. Let's see what like they say real quick. All right, so there we go. Wow, okay, so really they have one, an investment thesis like in the slide. All right, cool. This is great because this is like, why should I invest in you? They're like, here, we'll tell you why you should invest in us. Proven growth strategy and strong outlook. Consistent top line growth, EBITDA, margin expansion capability, strong balance sheet. We'll be the judge of that. But I believe you. I wouldn't assume they're lying. Vertically integrated operations, cool. All right, cool buzzword, but could also be true, right? Not that it's not true. I'm saying like could be that it's actually a huge advantage. Non-cyclical industry dynamics, variable costs. Oh. Okay. Yeah, that is important. Poor and deteriorating roadways in existing 5 states. State and local governments have increased funding for roads. Majority of the work. This is, by the way, is a very like. There's a word. I think not nepotism, but this type of business relies a lot on relationships, like politically. You gotta be in good. You gotta be in good. Their backlog is already at record levels. I think it'll grow from Hurricane Ian. If you look at their geographical footprint, okay, that's probably in here somewhere. Oh yeah. Oh, okay, a little close to home there. Headquarters, GMA plants. No, this actually, like, legitimately, this is like a Gen Core investment, but actually shareholder friendly, probably. 3 levels of growth, organic growth. Maybe I should talk to them. I should inquire with investor relations. Be like, hey, I know of a company that you could acquire. No, I'm kidding. That company would not be good to acquire. They would not get a favorable price. Proven strategy. Well, actually, no. Maybe if they let the shareholders keep the cash. Yeah, it'd be cheap. And then you get like the machinery for it. More vertical integration. All right, so C, D+, C+, D+. Wow. Yeah. I wonder if they worked on the recent I4 improvements. Strategic rationale. All right, cool. All right. Hot mix asphalt plants. Safety #1 priority. Huh, I love this. Safety is the #1 priority. Diversity and inclusion. Workforce is 40% minority. I think that's gonna. I don't know if that's like a wow thing or I don't know. Sustainability asphalt among the most recycled materials in the United States. All right. Ah, yes. No, I'm not gonna say it. I was gonna say it, but I'm not gonna say it. I'll just scroll back up to here, and it'll just. I'm not gonna say anything. Not my business. But yeah. All right. Sustainable growth strategy, revenue, net income. No, I'm actually interested. I'll actually look into this. Because that's going to be more of a statewide thing. Okay, this is what you were talking about, their backlog. Yeah, wow. Keeps growing. More business than you know what to do with. All right. Nope, this is actually going on it. And just because, and by the way, guys, just because it's gone up a lot doesn't mean it's not a bad buy, so to speak. So, yep, don't get trapped in that. Then you'd be buying maybe some dead companies or dying companies. Oh, you know what? I want to show you. I haven't brought this one up in a while. I forget the. Oh my gosh! Like, if you guys needed a reminder for whatever reason, do not buy this company whatsoever. Let me show you why. I just wanted to show you this chart. Look at that beauty. What does that say, Cole? Can you read that?
No, I don't have the stream up.
Oh, you're not in the stream? You disgrace me, Cole. That's yeah. Your eyes do not deceive you. Too late, bought it. Yeah, nothing could go wrong. Nothing could possibly go wrong. Yeah. What does that measurement say? That's yeah, 5. Yeah. What is it? Not 500 million.
Yeah.
$500 billion per share.
What?
Oh yeah, just because you're not seeing the stream right now, Cole. You're missing out. $500 billion per share. It got close to. It passed. This company was past 400. Basically, they did a lot of, you know, someone guess it, reverse stock splits. This is, yeah, reverse splits.
You can split beyond like one share?
No. They did a lot of reverse stock splits.
Yeah.
But so they issued a bunch of shares. They issued stupid amounts of shares.
Yeah.
And they did a ton of reverse stock splits. Death spiral financing. Good case study.
What company?
Delcath Systems.
How much is the total market cap?
Market cap's 22 million right now.
No, but at the peak.
Oh, no, it was probably also like 200, maybe 100 million.
Wait. So the per share was higher than the market cap?
No, not back because of the reverse stock splits. When you go on the Google's chart and you go back to those years, which was like 2010.
I thought you meant they had reverse split so much that there was like 1/100th of a share.
Oh,
like
no.
Share.
No, they reverse split so much that their shares back in the day were $480 billion per share in today's equivalent price. So
gotcha.
Stupid stuff. All right, anyways, I always think this is hilarious. Reminds me of dry bulk shipping. Yeah, death spiral financing. It happens. All right, reverse stock splits. By the way, one of the funniest things happened to me today. What happened to you? Why do you think GPN has such a low ROIC? Are they bad capital allocators in your opinion? No, and I'll save that for the video on ROIC. I heard a rumor they're buying back shares. Oh, yeah, definitely not. No. This is just an example of like death spiral financing. Anyone who buys this, that is all on you. That is all on you. Yeah. If only I sold at 1 billion. Yeah, you can think about it that way. Yeah, you caught the stream swaggity pig fig. How you doing? Well, yeah, we talked over all these topics that are in the title. We've talked about all of them. We're kind of just you're really gonna give me some finance. That's it. I'm buying calls on Delcath Systems. Yeah, no, please. Don't. Your wallet will hate you for that. All right, but I'm actually gonna investigate this company. So now I'm gonna add that to the list.
Bacon Memes says he's buying calls on Dell Caddy systems.
Oh gosh. I'll join you,
don't worry,
pal.
Fabio,
Oh my
you
gosh,
won't.
no. What have I done? I should have never. Imagine it just like swings. Well, no, because after a certain size, you could probably swing it to the up or no, you couldn't swing it down because no one's gonna sell. No one's gonna go out of their way to short that thing. I wouldn't do that either. I would just not even. I would avoid it entirely. Yeah, I heard a rumor they were buying back shares. Did you explain how that $100 million deli scam worked in New Jersey? No, I have not. And I got to read into it more before I make either a video or a comment on it, because I think like there's more interesting parts of the story. I haven't gotten the chance to. I saw that you gave me the article, but I haven't gotten to reading it yet. Consider pay for an infrastructure play. Why not? It'd be probably a good comparison, I guess. PAVE. So these are tickers I have never heard of before, but you always learn new ones. There's always new companies. Oh my gosh, Julius. Oh my gosh. Degeneracy in the comment section. All right, with that being said, guys, I think I'll close it off here. You guys have been a wonderful audience. Had a lot of fun. Look at ACC. All right, I'll put ACC down on the list too. Oh my gosh. A lot of these ACC. All right. And I will be seeing you guys on the next one. You got the portfolio update. We talked about Tattooed Chef. We talked about someone going to colleges. We talked about REITs, me getting back into REITs over time, but we will see as how fast that happens. And good night. Have a great sleep, everyone. I will see you guys on the on the
Peace. Oh, god damn it.
We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.